map and see as to what sectors are doing right now, and as to what the sectoral picture looks like. You have pharma seeing gains of about 2.6%, followed by realty, which is up 1% as well. Metals also doing fairly well, up 1%, and your auto pack is also doing fairly well. FMCG is where the pressure really is, down by about 0.6%, and you have Nifty Energy, which is also seeing profit booking down by about 0.5%. So that's with regards to where the sectoral picture goes, but also the advanced decline ratio to help us understand as to what the broad end of spectrum is doing. Both the mid cap 150 and the small cap 250 doing fairly well, and that's indicated in this advanced decline ratio, Puneet, because almost more than 2:1 ratio is what we're seeing.
And that's healthy to see at this point of time, right? Because we've seen the broader markets actually doing much better than the benchmarks. Benchmarks continue to have that selling pressure. 24,300 we touch, and we're now back again in that contractionary zone in that sense, and that's visible on your screen right now for the broader markets. But the BSE 500 also puts in perspective some key ones in terms of what's moving in trade today. Embassy Development continues to be up 20%. Shoppers Stop is a surprising one because results weren't too great, but Spark also up 14%. Delta Corp up 13%. Alkyl Amines up 10%. So actually from the morning show, there has been gains being built into a lot of these games, and Coforge is also one of them, up 9% on the back of results. On the losers though, you've only seen KPIT Tech on the back of results now that is under pressure, and Exide also is down in trade today as well. But before we start taking all your stock related queries, an important update that we want to put through, because rising input costs, especially in the textile sector, are now beginning to flow through the apparel companies. Now with over half the increase already passed on, sources are telling NDTV Profit that further price hikes are expected in the coming months. And my colleague Ridhima is now joining us to give us all those details. Ridhima, over to you.
So textile industries are now putting their input costs, they're going to give it to the apparel industry as per the textile and garment industry sources. Now further input costs could be fully passed on to the textile industries. So right now due to this pass on, the cotton prices have risen by 7 to 8%, whereas synthetic garment prices are up by 15 to 20%. So apparel companies are already thinking of passing on this to the customers. Some of them, the smaller apparel companies, have passed on 4 to 5% in May, whereas the bigger apparel companies are still in a wait and watch situation before they pass on the hikes, as they have more capacity. And now stocks in focus include Trent, Aditya Birla Fashion and Retail, V-Mart, V2 Retail and Bazaar Style Retail. Now this price which will be put on the customers, that will be reflective only in Q2 FY27, and it's a wait and watch situation when this price hike exactly happens for the companies, and when the bigger companies sort of take a lead and set the trend.
Thanks so much for that, Ridhima. So continue to monitor all these trends, and we'll start very shortly with the stock related queries as well. Let me welcome in Kunal Shah, Senior Technical and Derivative Analyst, and Mirai Asset Sher Khan for the same, and we'll be joined by Chakri Lokpriya on the fundamental side of things too. Kunal, very good afternoon. Thanks so much for joining in. Let me take the first query now with you on HCL Tech actually, and our viewer Shanta Murthy from Bengaluru is holding 50 shares right now of the counter at almost 1400, currently sitting on a loss of almost 27,000 rupees. Is there any kind of indication, because the fundamentals have been quite weak in this quarter for HCL Tech? What's your view on the stock now?
I think overall for the stock specific for HCL Tech, I think already we have broken the critical support zone. So from a short to medium term perspective, the view continues to remain negative. Any bounce if you get into the stock, since it is trading in the oversold zone, again utilize that as an exit opportunity. We might see the stock sliding down further towards the mark of 1120.
Okay, all right. The next one that we have is on Tenneco Clean Air. Our viewer Shankar from Bengaluru is asking if buying at the current price makes sense. He's planning to buy around 100 shares. We have Chakri joining us now. Chakri, a very good afternoon to you. Your view on Tenneco Clean Air?
Tenneco, sorry, I don't invest in the companies, so I don't know much.
No worries. Kunal, do you think there's enough data on the charts to give some perspective?
I think not a level to buy at the current levels. Already somebody has bought and continue holding it. But currently, I think the stock is already overstretched on the technicals. Might see some profit booking in the coming days.
And most certainly one of the big beneficiaries of Mahindra as well as the 7XO model getting upsold because of the suspension system that Tenneco had provided. So when you look at the year-to-date chart, also you will see a sharp up move of Tenneco Clean Air on the charts. Let's try pulling that up very quickly. There you go, 27% from the lows for almost 492 as well. Recent listing though, so but that's a key perspective on Tenneco as well. But Sriram Raghuram from Chennai is holding on to 50 shares of First Source Solutions, bought at 105. Now he bought it back in May of 2022. So he's doubled his money in the last 4 years and held on to it. So very kudos to you, Sriram. But Chakri, do you track First Source by any chance? The results came recently, actually just an hour ago, and have been accepted well by the markets, looking at the 5% up move. But any view on this counter?
Yes, the results are good. And, as a company, I think it's well positioned in both the outsourcing bit of the business as well as their organic growth. I think they'll continue to gain traction. So I think it's worth holding on to if he's a long-term investor.
Okay, the next one is KPIT Tech. Ambika from Chennai is holding 250 shares, bought at the levels of 650. Wants to know if she can continue to hold this from a long-term perspective. What's the long-term view on this particular counter, Chakri?
KPIT, along with the rest of the IT companies, is going through a massive reset of growth expectations. So that uncertainty will weigh on the stock. So maybe it's a good time to take some money off the table.
Chakri, did you have a view on the results today as well, or that just continues to be the momentum in terms of on this counter?
The results have continued to show the fairly muted overall environment which is plaguing the whole sector, and manufacturing IT, for it to pick up, is still quite some ways away. So I think it's therefore from that perspective it would be good to take some money off the table.
Fair point, Chakri. But the next question now on Jubilant Pharma. Our viewer has bought 50 shares, bought at 440, and this is Sriram Ranganathan, who's from Chennai, asking about a recommendation on this counter. Let's pull up Jubilant Pharma, now up at 955. So he's also doubled his money here. But Chakri, it's been a counter that's been missing in that sense in terms of momentum over the last 3 to 4 quarters. Would you say that he should continue to hold on given the attractive buy price, just 440?
The answer is, clearly there's nothing like taking money off the table. The growth has been kind of, languishing lately. And, so therefore, the expectations, the earnings expectations, momentum are likely to slow down for the business. From that perspective, that's why I recommend taking money off the table.
Okay, we've got Anjali who's calling us from Hyderabad now. Anjali, a very good afternoon to you. I believe you have a question on Sumitomo Chemical.
Yes, ma'am. Good afternoon to you, ma'am, and all of you. Yes, ma'am. I'm having Sumitomo Chemical 200 quantity at the price of 550 average. So
Anjali, I wanted to understand as to what is the time period that you're looking at for this particular counter?
6 to 8 months, ma'am.
6 to 8 months. All right. Then I'll take this up with Kunal. Kunal, your view on Sumitomo Chemicals?
I think recently the stock has witnessed a sharp recovery from the lower levels. 480 was a decisive level which we have taken out in today's trading session. So this move can extend since he has a 6 to 8 month perspective. I think continue to hold the stock probably around the buying price or a bit above. You might get an exit point for the stock. Overall, the larger term trend for the stock continues to be sideways. Utilize this opportunity where you'll be getting a move towards 500, 550 on the upside as an exit opportunity.
Got that view, Kunal. And viewers, you can also call us for stock-related queries as well, as we have our experts here who will answer your questions. So, before we start, of course, the rapid fire session, it'd be good to get your calls in. But the next question, Kunal, also on MTAR Tech. This one's been in its own zone here, Kunal. What would you recommend? It's a good target. That's also a question coming in from Chennai, because now at 6,200, does the momentum still continue?
I think definitely time to take money off the table for MTAR Tech. Any bounce, even if you get from these levels, also utilize that as an exit opportunity. Clearly, we have seen a very sharp rally on the upside. Even on the larger time frame from the technical perspective, everything is in the overbought zone. So you might see soon a correction coming into the stock.
Okay, the next one is on Titan. Vijay from Chennai wants to know the short-term target on this particular counter. Kunal, I'll stick with you. What are the charts suggesting for Titan?
The Titan has been losing some momentum in the recent times. Already, it has seen a sharp rally on the weekly charts. There has been a negative divergence on the stock, and the stock has been making a new high, but your momentum indicators are weakening. So clearly, again, for Titan also, my recommendation would be to pull off the money from the table. You might see some correction coming towards the lower end of 3,900.
Got it. Well, the next is an interesting question from Prashant, who is also a regular viewer of the show. And Chakri, he was watching our show, Ask Profit, earlier on, and he had asked that, you'd earlier recommended Uno Minda as one of the counters for a long-term view. Would you recommend even entering this space, this stock right now for the next 1 year?
Uno Minda for the next 1 year or more, definitely yes. As a company, it's facing, along with the industry, shorter term issues in terms of order momentum because of the export revenues are being somewhat impacted because of the current geopolitical, but for longer term, yes.
Okay, all right. So that's the view coming in on Uno Minda. The next one that we have is coming in on J&K Bank. Our viewer, Sabita from Hyderabad, is holding 100 shares at the levels of 121, wants to know whether to hold or exit this counter. Kunal, your view on the charts for J&K Bank?
I think if she is holding from a short-term perspective, then definitely take some money off the table. But if she has a bigger horizon, say 5 to 6 months perspective, then probably one can continue to hold. The stock can extend towards 155, 160 on the upside.
Got that view, Kunal. We also had the management today at 10:30 where they spoke about how FY26 was kind of flattish, but expectations are higher from next year as well. But take across another caller from Vijayawada now. Aruna has a stock query for us. Aruna, good afternoon. What's your query?
Yeah, good afternoon, sir. I'm having Oracle Financial Services, OFSS, 100 quantity of 8,300 average.
Okay.
So what is the long-term and short-term view on this? If I want to sell, what is the point to sell?
Got it. Well, Aruna, firstly, good on you to buy it at that price, just on an up move, and good to get those gains of almost 1.4 lakh rupees. But Kunal, this counter has seen so many queries that we've gotten on this one. From 6,200 on, the rally has gone all the way up to the current market level. Do you think it has more legs, or should Aruna book out her profits right now?
I think continue to hold the stock. 9,600, 9,800 has been the rejection zone earlier, and we have tested those levels on the higher end. Now already I have seen a sharp rally, so there could be minor pullbacks that would come in. But overall, I am expecting, since the uptrend has been very strong. So again, this is a new leg that has started into the stock. We can expect this move to continue towards the mark of 10,200, 300 on the upside.
All right. Okay. The next one is on Godrej Agrovet. Our viewer, Sanket from Delhi, has been holding 807 shares at the levels of 605. Wants to know if he can continue to buy more, keep holding on whatever he has. What should be the future prospects for this one is what he's asking. So Chakri, I'll come to you on this one. Your view on Godrej Agrovet?
Godrej Agrovet is a very slow-growing company, and the sector is subject to a number of vagaries. And there are also, every once in a while price controls that can come in. So from that perspective, I wouldn't really add on, but wait for a better price because valuation is still okay.
Okay, all right. We've got Pradeep who's calling us from Bengaluru. Pradeep, a very good afternoon to you. Go ahead, ask your question.
Very good afternoon, Mahima. See, I am having 100 shares of Goldium International, bought at 144 rupees, and 100 shares of Salzer Electronics bought at 340 rupees. Now, I wanted to sell one of these shares, so which I should sell and which I can hold.
Sorry, you said Pfizer, right?
Pfizer.
Which is the other counter? Pfizer, correct?
No, not Pfizer. Salzer.
Okay, Salsa Tech. Okay, Salsa Tech. Okay, understood. All right. And when you bought this, Pradeep, was it the charts that you saw for both of these?
Oh, I am a long-term investor.
All right. Okay, got your question then. And you want to book profits in one of them. Is that understanding correct?
Yeah. I wanted to know which I should book profits and which I should hold.
Okay, got your question. I'll take this up with Chakri then. Chakri, Goldium International is one counter that he's been holding. The other one is Salsa Tech. Which one do you think has more potential to grow further, and which one should he book profits for?
Both are good companies, but if you have to take one off the table, I would go for Goldium. Sales Electronics has a number of triggers coming in the next couple of quarters, business triggers, and therefore worth holding on to.
Got the view, Chakri. But the next question from Uma from Bangalore, and this one's coming, Kunal, towards you, because she has an open-ended question on the solar industry. She wants to play this theme via the charts, but for a slightly more time frame compared to the near term. Anything that's on your radar right now within the Wari is the Fujiyama Power, because we've seen a bunch of new listings and a few existing one like Premium Energies amongst others. Anything that you like in the space now?
I think recently we have seen a good dip in Vari, and I think that's a good buying opportunity. Again, it has come to that demand zone from where we had seen the previous rally which has started. So again, the risk to reward ratio seems to be favorable. So one can go long over here, can probably expect targets of 3,500 on the upside. Also UTL Solar, which is Fujiyama. Again, the rally has been very sharp from the lower levels, but recently we had seen a dip. Again, that dip has been bought aggressively. So again, this can also extend the move towards 310, 320 on the upside.
Okay, all right. It's time for a rapid fire round. Kunal and Chakri, try to keep your answers as short as possible. The first one is from Subramaniam, who's writing us from Bengaluru. He's holding 1,000 shares of Vodafone Idea, bought at the levels of almost 17 rupees. He wants to know if he can hold or sell from a long-term perspective. Chakri, your view?
Very difficult to call, because a huge amount of debt. So therefore, I'd rather sell the stock.
Mr. Reddy is holding on to Aeroflex at 167, Kunal, and he's holding 3,000 shares. So he's in quite a lot of gains at this point of time. Would you recommend him to book partial profits, continue to hold?
Yeah, book 50% and continue to hold the rest.
Silchar Technologies, from a slightly long-term perspective, Kunal, your view on the charts. Kalyani from Telangana wants to know.
Sorry, I'm not able to find the stock.
It's Silchar, S-I-L-C-H-A-R.
SIL, right?
Yes.
Sorry, I'm
no
not
worries.
able to find this.
By any chance, any view on this one, Chakri?
No, I don't know this company. I'm sorry.
Sure.
The next one, coming in now, it's from Shankar, who wants to know a quick view on NTPC Green, where he's planning to buy 500 shares. Would you recommend that, Chakri?
NTPC Green, clearly yes, because long growth potential ahead of it. Valuation is okay.
Canara Bank bought at the levels of 161. 2,000 shares what Arvind has bought. Wants to know 6 to 8 months view on the counter. Kunal, your view?
I think the view continues to remain bullish on PSUs from a short-term to medium-term perspective. Continue to hold the stock.
Shrikanta wants to is holding 200 shares of Avanti Fee. He's not mentioned the price, but Chakri, space has seen a massive re-rating, but a very big opportunity. Would you still continue to hold?
Yes, clearly this is the time to hold the stock. Huge amount of re-rating is possible.
Okay, Federal Bank, is this the right price to buy? Chakri, this question is directed towards you. Anil Singh is asking.
Results are okay. Banking as a sector is fine. Federal Bank strong, good results. So I think worth holding on to.
Kishore from Hyderabad is holding on to Tejas Networks, bought at 413, and he's holding 150 shares. Now, he has a long-term view, Chakri, of 18 months, but should he continue to hold? It's been a very volatile counter, right?
It is a volatile sector, but stock and worth holding on to. Long-term potential is very good.
Okay, TCI Express bought at the price of 732. 212 shares is what Rashmi has been holding. What should she do next? Kunal, your view on the charts?
And they continue to hold.
Ajay Agarwal has LTM 150 shares at 5,500 here. So he's in a loss right now, Kunal. Should he average down? What do the charts suggest?
I think no, definitely not averaging it down. In fact, utilize pullbacks as an exit opportunity.
Orion Pro Solutions bought an average price of 886. 24 shares is what Suman from Kolkata is holding. She wants a 3 years perspective. Chakri?
Yeah, I think from a 3-year perspective, I think there is some amount of leeway, so worth holding on to.
Brigade Enterprise, is it a good time to enter this counter now, Chakri?
Yeah, I think real estate as a space will do well after all these geopolitical issues are kind of settled. So it's a more longer term play.
Okay, TCS bought at the levels of 2730. Average or sell? 5-year view on this one, Chakri?
There are enough headwinds now, so I would rather sell the stock right now.
Sigachi Industries bought at 43 by Madhu Babu and he's holding 1,000 shares. Now, it's been a very volatile counter, Kunal. Should he continue to hold down? What's your opinion?
Sorry, which counter?
Sigachi. Let's pull up the one-year chart also as Kunal goes through it. Very volatile. I think there was a fire incident also at the company. But any view here, Kunal?
I think, again, utilize pullback to exit the stock.
Correct. Well, that is the end of the rapid fire as well as this edition of Fast Profit. Chakri as well as Kunal, appreciate your time and your inputs on a whole bunch of queries. With that, we've reached 90 queries for the day, including both the morning and the afternoon edition. So thanks so much, viewers. Of course, that's 54 queries of the morning. And Chakri as well as Kunal have helped us solve almost 36 queries in this half an hour of the show. But thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No.
Hi, thanks so much for joining in. You're watching India Market Close, and take a look at this. What more has to be said? We've bounced from the low point of the day and we're currently well above what we started off at the high point of the day and climbing further. This is the benchmark Nifty 50, and the broader markets are also moving in tandem. So pull up the mid-cap index while we're talking about this. It is at the high point of the day, 1.6% higher. Let's pull up the small cap index as well, and it's gaining about 1.6%. What is occurring? Let's pull up the bank Nifty to see if it's showing a similar up move, because you have the frontline banks that have gained quite considerably. In fact, it is trading with gains of about 2%. Pull up the heat map for the Nifty 50, because this is a very sharp move, and you're seeing a lot of stocks that have moved from the low point. If you watched the show this morning, you would have seen that there was a considerable amount of red on the screen. That has changed quite considerably. And you have Indigo that continues to rule the roost. It was one of the top gainers in trade in the morning, but you have Dr. Reddy's Laboratories trading at the high point of the day. You have Tata Motors, PV, Trent, etc. that are doing well. But you will see the banks. Axis Bank is up and about. You have SBI that is up and about. HDFC Bank with gains of about 2.3% or thereabouts. And you should see ICICI Bank as well with considerable gains of about 1.5% as well. So the heavyweights on the benchmark Nifty 50 are really pulling ground today. Pull up the contributors chart just to drive home this point. And right on top of the screen, you have HDFC Bank and ICICI Bank, followed by State Bank of India and Axis Bank. 5 banks that are leading the gains and contributing a chunk. But don't forget this, because if you take a look at the 190 points that is being contributed by the rest of the pack as well, then this is a very strong up move. Quite a considerable amount of this is being led, as you've seen, by the banking index. Reliance Industries on the downside, Larsen & Toubro reacting to a certain extent to the outlook for the first half, which the company itself has said is going to be a little soft in the current context, is losing a little bit of ground. ONGC, Infi are the other drags, but not too much in the way of big losers for the Nifty 50 at the very least. Let's talk about the heat map for the sectoral indices, because you will see a large amount of green. Of course, this was the case in the morning as well when we opened up. In fact, if anything, you have a little more red on the screen than you did at the start. But you have the pharma index, PSU banks. This is an index that has been underperforming in the recent past, and we were talking about the possibility of the Nifty bank breaking past the lull that it has had, and that up move and that trigger that you had this morning with regard to the guarantee scheme that was announced by the government seems to be the trigger that these banks needed. So the PSU banking index is up as much as 2.5%. You have the mid-cap index that is up and about. Realty is doing particularly well. The Nifty bank is up about 2.3% or thereabouts. You have auto as an index that's doing okay. The mid-cap index is up about 1.8% or thereabouts. The Nifty metal index as well, up about 1.5%. What isn't doing well on the downside is actually the FMCG index and the CPSE index, both of which are losing less than 0.2% each. So what are the factors that are at play right now? You have had holding on of 24,000 for a while. We're well above that, in fact. at this moment, and a consolidation in the range of 23,800 to 24,300. You've seen value buying that continues in small cap as well as in mid cap, and the broader markets have outperformed the benchmark. That continues to be the case, but the late move that you've seen in the benchmark Nifty 50, we'll have to see where it ends up. The top sectoral gainer for the fifth session is pharma. All constituents or most constituents trade in the green. The Nifty Bank is actually seeing support at 54,600 for the second straight day, and the major resistance is at 55,600. I just want to pull up the intraday chart for the Nifty 50 again, because while we were speaking about all of this, it continued to climb, and it is trading 283 points higher above what has become a very critical resistance level in the recent past at 24,300. So the question to Nilesh Jain, who's joining me right now, of Centrum Broking, is with the blitz that we're seeing right now, Nilesh, and there's no other way to describe it. It's a blitz, and we've run very quickly to that 24,300 mark. What are the fresh levels that you would look at for both the benchmark Nifty 50 as well as the Nifty Bank, which seems to be in a tearaway hurry today?
Very good afternoon, Alex. Absolutely a very strong rebound that we have seen today. I think it is more sort of a giving confidence, because now today the Nifty has taken support exactly at its 21 as well as 50-day moving average. So cluster of support at today's low somewhere around 24,050. And from now here on, we are expecting a move towards 24,500. So another 200 point uptick is something that we can expect in a very short-term time frame. So it's a buy and decline now. We are getting more confidence because the volatility index in India is cooled off sharply by 6% today. And for the first time after a long time, it has slipped below 17. So that is another thing that is giving more confidence. Coming to the Bank Nifty, after long underperformance over Nifty index, finally it has shown a big outperformance over the Nifty index, and also making an attempt to cross 56,000 as well. That's the 50-day moving average for the Bank Nifty in the spot level. So overall, Bank Nifty also looks strong for 56,500 to 57,000. So we are expecting a gradual uptick to continue towards this 200-day moving average that is placed somewhere around 57,200. So that will be the next target in the May series that we can expect. So both Nifty and Bank Nifty look strong, but yes, broader markets are looking more stronger than the benchmark indices. Mid-cap index is merely few hundred points away from a new record high, and the kind of rebound that we have seen in the small cap index, that is also giving more confidence. So overall, it looks like a broad-based buying that we are witnessing, and it is likely to be a sustainable one.
Just as we're speaking, the peak has been found, and it's just gone a slight bit below that peak, right? So we've broken below the 24,300 mark for the benchmark Nifty 50. But your point on the broader markets is well made, Nilesh, because if you look at April as a whole, then you see 17% gains for the small cap index, about 13% for the mid cap index or thereabouts, and you built on that in the recent past with an outperformance in the broader markets, right? So there you go. So 1 month, of course, does not capture all of April, is up about 15.5%. But let's talk about individual stocks, and I did not bring you those. As I look at the 500 stocks of the Nifty 500, there are just over 100 declines. But the key gainers, let me highlight those for you. You have Alkyl Amines, which is doing particularly well. You have Wockhardt, you have Valor Estate, you have Coforge, that is reacting to numbers and continues to gain ground. You have Tejas, you have eClerx, and you have SRF, which is our selection for the stock of the day, and we'll come to that in just a bit. Among the key losers, you have not too many in the way of very, very big losers. You have Schneider Electric, that's losing about 5%. You have Vardhman Textiles, you have KPIT Tech, Ather Energy, all losing over 4% and less than 5%. You have Credit Access, that is seeing a little bit of money being taken off the table after the sharp rally that it saw in the recent past. But I've listed out several stocks for you, Nilesh. Is your pick for today among those, or is it separate?
Well, Alex, a very good setup across the broader markets we are witnessing today. So slightly different set of stocks that I have. First of all, within Pharma Pack, we have seen a very strong momentum. So we are very much constructive on pharma space. Mankind Pharma, this particular counter has given a very good breakout today. In fact, yesterday as well, we have seen a very good setup. Today, on derivative front, we have seen 4% OI addition as well. So we are getting more confidence on derivative front as well. With this kind of a breakout, we are expecting a follow-up on the upside towards 2450 to 2500. These are the two targets on the upside. And 2295, somewhere around today's low, will be the stop loss. So Mankind Pharma will be first preferred bet. Apart from that, if you see the other stock that we are liking is Shriram Finance. So NBFC space will be another space where we may see the momentum coming back. So Shriram Finance, we are bullish for upside target of 1020, 1040 with a stop loss below 978. Shriram Finance is also a buy. And lastly, one more counter that I have is MCX. So Bombay Stock Exchange is trading at all-time high, and MCX is likely to follow that momentum on the upside towards 3200. That's again a positional target. So one can keep a stop loss below 2900, and MCX is also buy.
Now, of course, at this point, it's conjecture as to why the market is rising as much as it is. But there is a possibility that a news report that was put out just 16 minutes back, from what I can see, by Axios about the US-Iran conflict could have had a bearing in turning the tide. Because if you look at the intraday chart for the Nifty 50, you will see that that big spike took place about 20 minutes back. Now, what are they saying? And it's a pretty simple update for you. There is a possibility that the White House believes that it is getting close to an agreement with Iran on a one-page memorandum of understanding to end the war and set a framework for more detailed nuclear negotiations. They have quoted 2 US officials and 2 other sources that have been briefed on the issue. It must be stated very clearly that NDTV Profit or the NDTV Group don't yet have any confirmation of this story, and therefore it is not verified. The feeling at this moment is that the market could be reacting to the possibility that the US-Iran war, the tensions might be dissipating. We just had Brent crude on the screen right now. Let's pull those up again, because earlier today they were already reacting, or rather last night, crude oil prices were reacting to an update by President Donald Trump that said that Project Freedom would be put on hold in the near term, for a little while, because there is significant progress that was made, according to him, in the talks with Iran, and they were moving to a conclusive agreement. So Brent crude now trading lower by as much as 6% at 103, 103.5, and moving lower very, very quickly. I just want to also pull up the rupee if we can. And if we can pull up the exact rate as things stand right now, you will also see a sharp reaction in the Indian rupee. Remember, for the rupee and the chart that you're seeing on the screen, down is good. That means that it is appreciating against the US dollar, 94.68 as things stand right now, and a pretty sharp move, a 0.6% move for the USD INR pair in a day is a pretty sharp move. Nilesh, if you have a view on crude oil prices or the Indian rupee, if you can step in and perhaps give us a check on either of those two.
Right, Alex. So we have been tracking both the commodities. So first of all, USD INR, if you see, it has formed somewhere kind of a double top pattern on technical front, where 95.30, 95.40 has acted as a very strong resistance. And it has also gone into extremely over territory. So this kind of a profit taking was very much likely. So we may see further retracement to continue on the lower side towards 94.2 to 94. And it may test its 21-day moving average that is placed at 93.81 in the best case scenario. So overall, as of now, at current level, we expect some bit of profit taking to continue. So rupee may appreciate further. Now coming to the Brent crude, similarly, we have seen multiple tops at $120. If you can pull up last 2 months chart, you can clearly see at $120 to $125, that was a strong resistance zone. Multiple tops can be seen at that particular range. So now we are expecting a follow-up more on the lower side to continue towards 102 to 100 and in fact $100 is something that we may see going forward. And if it breaks below $100, then next target straightforward could be at $90. So that will be further positive development we may see going forward, provided it should break $100 support on the lower side.
Sequence of events that you need to pay attention to all of this week. We've been focusing more on geopolitics than perhaps when you saw that bit of a lull in the conflict between Iran and the US. Earlier in the week, you had news of certain drone attacks and certain increase in tensions. And subsequent to that, you had statements that were made by Iran officials as well as the US. Iran, for example, talking about the fact that it believed that the US should not be drawn back into a conflict. Remember that this took place just a couple of days back. And since then, you had Project Freedom that was announced. It was said that the blockade would remain in place, but the US would help vessels that were stuck in the Hormuz Strait to get through and to pass through. The latest update, of course, last evening was that Donald Trump announced that they would put Project Freedom on hold. There was also a statement made by other officials of the Trump administration saying that a deal could well be nearing closure. And of course, Pete Hegseth, talking about the fact that the truce was very much continuing between Iran and the US. The latest, of course, is an update from Axios. Remember, we've told you that this is not confirmed. It is a source-based report quoting multiple sources of the US administration and White House saying that there is a possibility of a memo or of a one-page document and an agreement being signed by the US and Iran. Devin Choksi joining us right now to talk about the markets and everything else that is happening. Devin bhai, thanks so much for taking the time. We're sticking with this geopolitical story because it is the biggest story as things stand right now. Between 16 and 20 minutes back, there was this report that came about saying that there is a possibility of a deal between Iran and US very soon, and the markets have really zoomed from that point. Would you buy into this, or would you hold out and wait for an official announcement to come through?
Yeah, Alex, good afternoon. Well, I think the deal is definitely going to be taking place. How soon, how fast, and in what contours I think this is going to happen, I think is something which is a subject matter of guess. And that's where probably I think the market is either excited or nervous on a given day. Today, I think what I would like to think a little differently, that assuming that the deal is getting through, if not today, tomorrow, the next thing that I think one will have to be extremely careful about is how exactly are you going to be positioning your investment in this quarter. See, the last quarter results have already given good amount of confidence about Indian corporate sector producing better numbers. However, in the first quarter, that is the current financial year, the first quarter, we are likely to see, I think, a severe amount of challenges in various companies and their books, etc. Those businesses which are dependent on global supply chain mechanism, the logistic management activity included, I think they are going to be having the first taste of challenge in this particular quarter with the kind of performance that they will be talking about. Already companies have started talking about pain in the high input cost, particularly the commodity prices, including the metal commodity, chemical commodity prices. So they already started talking about, I think, the adverse impact of that. And still the quarter is yet to get over, but at the same time, I think the businesses of the companies, if they are not meeting the kind of expected numbers, probably the market will not be very kind in tolerating the kind of valuation at which I think it has bounced back. So in my viewpoint, in summarization, I feel that I think today we stay in the range between 22,200, which is the low that it has made up till now, and 24,600, 24,800. Okay. In this range, market is tightly placed as I see it at this point.
Sure, of course, Devin bhai. Just want to go through what the details of that story is. And Pramit Pal Chaudhary, South Asia Practice Head for Eurasia Group, joining in. to give us the idea. Now, this is what is being claimed, and it is coming in from the White House. The White House believes it's getting close to an agreement with Iran on a one-page memorandum of understanding to end the war and set a framework for more detailed negotiations. They claim that this is the closest they've been to an agreement. So what are the provisions that we know of so far? The deal would involve Iran committing to a moratorium on nuclear enrichment, US agreeing to lift sanctions, release billions in frozen Iranian funds, and both sides lifting restrictions around transit through the Strait of Hormuz. We have to wait and see whether the Iranians respond to this, because we've seen versions of this coming in before. Pramit Pal Chaudhary, just want to ask you, of all of the things that this one-page memo reportedly has, do you think the Iranians will agree to not charging any levy through the Strait of Hormuz and leaving that unchecked? Because that is a strategic advantage they've gained as a result of this war.
So the most likely way that would be handled, the Iranians have already passed a law in their own parliament, in the Majlis, saying that they will have the right to impose such dues on any ship that goes in and out of the Straits of Hormuz, and they will share that right only with Oman, which controls the southern shore. So legally, there is no way back for the Iranians. But what can happen is either the Iranians can unofficially say, we won't impose such a due for an unspecified amount of time, calculating that when the Americans eventually pull away and this war comes to an end, they can impose that due anyway, and nobody will really be in a position to protest. Or they can wrap it in a different language. For example, the Iranians have also said they expect to be paid a war reparations for the damage that has been done to them during the war. And they could therefore theoretically put those dues under a war reparation structure, charging the countries like Qatar, Saudi Arabia, and UAE directly and say, you pay it to us in that case your ships don't get. I will expect Iran to still demand some kind of money, but it can be wrapped up in a manner that is not of the same language that the Americans are saying. So the principle that the Straits of Hormuz remains open as an open international maritime corridor can be preserved.
Pramit, hi, Alex here. The other sticking point, and something that you've heard about in fits and starts from the Iran administration, I'm calling it the administration, but the spokespeople, shall we say, of Iran, is the nuclear deal and the lack thereof, and their unwillingness to surrender the enriched uranium that they have. So where do we go on that front? Because they seem to have been unwilling to budge on that point.
Well, what is interesting, if this one-page memorandum is anything to go by, the Americans have actually walked back from their original position. So the first issue was the enrichment question. America said, you must commit not to enrich uranium for 20 years. Iran had said, we are prepared to commit to 5 years, which is exactly what was under the original JCPOA agreement. In this memorandum, it seems the Americans have said, why don't we go for 12 years? At least 12 years, preferably 15. Obviously, Iran will probably go for the shorter number. But you're seeing the Americans effectively walk to a mid position between the 5 and the 20 years. And so I think that's something the Iranians can live with. Not least because, especially if this does not come with any monitoring system or verification structure, it after a few years, Iran can really do whatever it wants. So I think we're looking at a compromise in which 10 years perhaps is what the Iranians will offer. But the Americans have clearly walked back from that original 20 years by quite a bit.
Okay, just one more point, Pramit. The fact is that we're hearing only one side of this, and I want to make it clear to our viewers, this is an Axios report that the street is responding to. And Axios, in its report, is quoting officials from the White House. There is no official word from the White House yet. Having said that, there is no word at all from the Iranians. And this is what we've seen time and again, right? Bluster and sometimes claims from the American side, and then the Iranians come and say that there's no such thing. How do we know this is not just one of those times?
So what we're seeing, I think, is a very standard negotiating tactic. The Americans have basically positioned themselves by saying, okay, look, this is what we've sent an MOU to a memorandum of understanding to Iran. We know that we believe that the Iranian regime is divided between hardliners and pragmatists, so we don't know whether it will be accepted. But what we will do is also leak it to the press. So if the Iranians come back and say, no, this is unacceptable, or come back with a set of demands that of their own, which America finds unacceptable, America can at least go to the public, to their public and to the international community and say, look, we made major compromises. The people who are being difficult about this are the Iranians, not us. And that's basically what they're positioning themselves as. This is, as you said, this is not the way diplomacy is normally run. Normally, you try to get everything settled behind closed doors. But in this case, given that Iran and America, the distrust levels are so high, they do not have diplomatic relations. Iran will be nervous to send even a foreign minister to meet an American foreign minister for fear he'd be assassinated. Given the state of relationship between, this is basically how it's going to play out. And finally, you have a President Trump, whose concept of diplomacy is, should we say, very different from what the norm is.
Yeah, different is one way to describe it. Thanks so much for taking the time, though, Pramit. Always a pleasure speaking with you.
Thank you.
All right, I want to go back to Deven Bhai on this. Deven, you were listening to this conversation, right? A geopolitical expert talking about it, and it seems like this is a move towards a deal, as you were pointing out. But the question is, what should your response be? And I asked that question to you at the start, but I want to refine that just a tad bit. You have crude sensitives. The top gainer on the Nifty 50 is Interglobe Aviation. It's up, 6% at this juncture. So the horse is already bolted. Is there any point jumping on it right now? You could well be in a situation where you're caught on the wrong foot.
Yeah, Alex, I think that's what the main point is, that we all believe that sooner or later, I think this situation is going to ease out, some agreement will take place, and I think the market will remain excited. I would like to believe that I think that excitement is not going to be permanent. It is going to be probably an event-driven excitement. The reason for which I think I'm saying this is because in this particular quarter, the reality check comes in. The corporate earnings are not going to be reflecting the kind of values that market is right now assigning to some of the stocks. And that's where we are going to see the challenge. Even if we want to believe that tomorrow onwards, everything will become normal, as far as I think the problem with the Iran and the other places is concerned, my still belief is that I think it's not going to get normal for the business. Business will take time. And that's where probably I would like to buy into this market during the correction. Having identified good opportunities and understanding the businesses at a right price, right time, I think one will like to buy. Now, the question will arise that I think we're going to sell at that point of time that you will buy. My take is that I think those who have actually bought it at a lower levels, they are right now also booking profits. So that is a good time to, I think, see the correction in the price. And that's where probably I think would like to buy some of the good quality stocks. Not in hurry at all, at least at this point of time, unless I think the stock is a compelling selective story.
Okay, Nilesh, I just want to understand from you, what is the Nifty position right now? Because if you think about it, this is what's been holding back, right? And having said that, we don't know if all of this changes because these things tend to change quickly. But as of now, as of the levels that you're seeing and the strength that you're seeing in the Nifty and Bank Nifty, please. You're on mute. Yeah, you're on mute. Yeah, there you are.
Right. So in last 6 to 8 consecutive sessions, we have seen some bit of profit taking that is coming back specifically in the second half of the session towards the closing hour. But today the case seems to be different. If Nifty manages to close about 24,300, that will be considered as a positive close. Then probably we can expect a short covering rally towards 24,500 to 24,600. These are the levels that we are expecting in the Nifty on immediate basis. So today's close, which probably we might see that closing about 24,300, and that will be considered as a positive close. And given the kind of a setup we are witnessing on India VIX, which has slipped below 17 after a long time, so that is also giving more confidence. And given the kind of derivative data we are witnessing, a lot of call writers were active at 24,300, and they might run for the cover now, and we may see a short covering move on the upside to continue. Now coming to the Bank Nifty, similar to the Nifty, it is important that it should close above 55,800. That's the 21-day moving average. And if it breaks above 56,000, that will be another confirmation that we'll be getting on the technical front. And target for the Bank Nifty now comes somewhere around 56,500 to 56,800. So the setup on the Bank Nifty also looks strong. And given the kind of outperformance we are witnessing today, we may see a huge amount of short covering in the banking space, specifically index elevated counters like HDFC, ICICI, and Axis Bank. So these are the three specific banks that we are keeping an eye on, and we remain bullish at current level in the Bank Nifty as well.
Okay. Picks that you would look at as this moves, how would you look at, say, an ONGC? How would you look at an Indigo? How would you look at an Asian Paint, some of those crude sensitives, Nilesh?
Well, Tamanna, as far as oil upstream companies are concerned, we have already seen a very good momentum in the stocks like ONGC, Oil India, and Coal India. But now I think we may see some bit of correction out there. The focus will be on crude sensitive stocks which might benefit from the falling crude oil prices. So first of all, Indigo, the setup has turned strongly positive after today's move, and we are expecting a follow-up on the upside to continue towards 4,700 to 4,800. So setup looks positive. If somebody is already holding the long position, can stay put, keeping a stop loss below 4,400. And major trend reversal can be seen across all OMC stocks. So specifically Hindustan Petroleum is something that we are liking at current level as well. After a spurt of close to 7%, there is still upside room left towards 425 to 430 on the upside. So yes, all these stocks within OMC space, HPPP, ISC look strong. Keep an eye on aviation space, specifically Indigo. So these are the stocks that we remain positive for further momentum to continue.
Okay, David Roche, strategist at Quantum Strategy, joining us right now. David, thanks so much for taking the time. Markets in India and in fact across the globe reacting to this Axios report that is quoting a number of sources, some of them from the White House purportedly. And they're talking about the possibility of a one-page memo, a deal to be signed between Iran and the US. And some of those provisions talking about the easing of restrictions of travel between on that Strait of Hormuz. What do you make of this?
I respectfully say that this is a press media report, and I have the greatest respect from my colleagues in the media, but I don't have a lot to go on as regards any factual evidence for a deal. However, what I can do is tell you what I think this would mean if it were true. You cannot settle the conflict which President Trump has started in the Gulf with a one-page memo, because it will decide nothing and put all negotiations out in the future, which leaves us in a worse position than when he started this war. So any one-page memo which says Iran is going to do this or going to do that, and the Americans are going to go home, is effectively a defeat. It is nothing to celebrate. Why? Because what matters to you and me is whether oil moves. And a deal, a one-page deal where the Americans go home, will simply say that Iran remains in charge of the Gulf. And then at least 50% of the oil will not move, because Iran has plenty of enemies among the Gulf states and others, which it will prevent using the Gulf for shipping purposes. So it will not settle the problem economically for you and me, and therefore not for markets. So I would say to you, hold your fire. Don't get carried away by markets which were already so frothy and are now blowing even bigger bubbles, because any quick fix to the Gulf will actually be a quick defeat for Trump. And that will leave what matters to us, oil, in as much danger or more than before.
Not to be facetious, David. It depends.
You never are facetious.
It depends on the size of the text. You can probably fit quite a bit on a page. But having said that, the crude oil prices have come off quite substantially, and Brent crude at 102 or thereabouts, where a couple of days back it was much higher. It was 115 plus. The oil market's also taking notice, David, or would you say that this is simply paper crude and is not indicative of what the real situation is?
It's not indicative of the real situation. Brent is a paper transaction. It's an investor vehicle. If you go down and try and get immediate delivery of oil, whether it's 40s or Brent or whatever, you will find that you'll be paying 30 or 40% above these rates. And the reason for that is very simple. With the entire Middle East network for exporting oil, including the pipelines on the Red Sea being closed down, we are short of 23 million barrels of oil a day. And that means that global inventories are falling and people are scrambling in the countries where the inventories are reaching critical level, the EU, Australia, India. People are scrambling to get oil at any price. And that's the price that matters. So don't be distracted by what traders are doing in financial instruments about oil. Look at real-time deliveries.
David, so therefore, and you've identified, I think very aptly, to say that this is not going to be solved by a one-page memo. So therefore, from your perspective, there are a couple of sticking issues, right? You talk about nuclear enrichment, you talk about control of the Strait, and you talk about reparations that are being sought by Iran. From your perspective, what will be needed for a conclusive agreement to be signed?
Oh, I think the only conclusive agreement which the Iranians are prepared to sign, and after all, you have to say, what are the Iranians prepared to sign? With the IRGC hard line in control, the only conclusive agreement that they're prepared to sign is a withdrawal of the Americans, not only from the Gulf, but from the Gulf states and surrounding states, an acknowledgement that they are in charge of the Gulf, which they, by any international law, are not, and that they can charge what they like to let whom they like through the Gulf. That's the deal they'll sign. And it's not the deal which anybody in their right mind seeking to solve the problems that we are dealing with, which is whether oil will move or not oil, they could not possibly sign this. But that is not what it's about. You see, you're asking me who would sign a deal which settles the issue. And I will say they will sign a deal which does not settle the issue, because Trump wants out because people see his policies as a disaster and the midterms are coming up, and he's prepared to get out at pretty well any price, I believe. And the Iranians want to keep the control which they've got, which is they lost the war, but they won the strategic battle for control over the world's oil supplies, the choke points, the Gulf of Hormuz, etc., and the Red Sea. And they're not going to give that up. Why will they give it up?
That was exactly my question. That was exactly my question. Why will they give that up? Why will you give up a strategic advantage that you've been handed? But then something's got to give, right? Otherwise, this blockade continues. David,
what they reckon they'll give is they reckon Donald Trump will give because he wants to go home. That's what they reckon. Now, whether they actually get to that point or not, we'll see. But why on earth would they give up? What has changed?
Yeah. David Roche, thank you so much for speaking with us. Just a quick question with Devin Bhai before we wrap up this segment. Devin Bhai, is there a strategic re-look at opportunities if this war is truly ending? Would you look at a portfolio reshuffle in earnest and some stocks which now set to benefit?
Tamanna, a lot depends on how exactly we see the commodity prices settling. Particularly, I am looking more at it because the India economy on a consumption side is a fantastic roadmap. So I think there is no second thought on that aspect. In fact, sooner the war-related uncertainties goes away, I think better it would be for the companies in particular, because I think they would be in a much better position to execute. The current challenge is related to the pricing pressure due to the commodity prices. And if those pressures, if that pressure is coming down, in some systematic manner, then probably I think market will look ahead with a larger amount of confidence. At the same time, I think some of the significantly subdued stocks like L&T, where probably we see the opportunities actually, I think, becoming bigger, but for this uncertainty at this point of time on execution, I believe that I think such kind of companies should be considered in the portfolio. Because I think when the tide turns for better, I get at this point of time, you are likely to see the better appreciation from some of these companies which are better down at this point of time.
Okay. Thank you so much, Devin Bhai and Nilesh, for speaking with us. David Roche will take a very short break. We're coming back with a crude check. We're speaking to experts on crude. We're getting you BTST ideas. This is turning out to be an exciting Wednesday close. How should you make the most of it? Are you making sure you're not caught napping when this finally ends? Look at that spike on the Nifty. The broader market's showing even more strength. We're coming back with all of that in just a second. Don't go away.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Inside.
Okay, it's becoming a wonderful Wednesday this close. Alex, how quickly things change also tells you how much pent up anxiety there is in the markets, and this is the one thing holding back, because it's not just the Nifty and the Sensex. You look at the rupee,
Yes.
you look at European markets, you look at American markets, you look at crude prices, you look at the VIX. All of those indicators telling you that a wall of worry might be fading and will drop quickly.
Yeah, absolutely. And the one asset class that you did not mention, Tamanna, but I think is going to be very critical to watch is bond yields.
Yes.
Because as of this morning, I was talking about it and it's been highlighted. In the UK, you have the 30-year yield that is at the highest level since 1998. You have in the US, the 30-year bond yield that is 15 basis points away from its 23-year highs. And in Japan, that's a similar situation, less than 15 basis points from all-time highs. So there is pressure because there is an anticipation that if this conflict is prolonged, there will clearly be a macro impact. But we've got Shivangi Sarda, analyst, equity derivatives and technical at Motilal Oswal, as well as Dharmesh Kant joining us on this leg. Thank you so much to the both of you for taking the time. Allow me, however, to go across first to Pankaj Srivastava. Okay, he'll join a bit. Okay, let me amend that. Let me go to you, Shivangi, then. On the charts, we've just gotten a check on the Nifty 50. I'm wondering whether your ranges have shifted based on the late rally that we've seen today.
Very good afternoon. Absolutely. It has been turning out to be a wonderful Wednesday close, of course. We've seen that index has rallied to the near resistance levels of 24,350 marks. And, the next up level that we're looking out for is 24,500. Of course, the support levels have shifted higher. Now we could look at 24,150 as an important base here. Of course, all the other, global tensions easing off, and with the, domestic cues also indicating a good sign of buying, we would recommend a buy on decline here as well, even to continue at these levels. And we are seeing buying across the street, across sectors. So some of the good picks could be handpicked from here. Of course, talking about the bank Nifty here, we've seen that outperformance can be seen here today after a series of underperformance. And we've seen that now it is holding above 55,500 levels. So till the time it respects these levels, we could expect an up move towards 56,500 odd zones for Bank Nifty.
Okay, futures, S&P futures are up and about. I wonder if we can pull up the rupee. It's at its strongest point of the day. We'll pull up the rupee for you in a bit as well. You're seeing US futures doing very well, 94.62. So either you look at it at lowest point or highest point, but let me just put it this way, it's at its strongest point of the day at 94.61. Brent has cracked nicely, good for India. MCX Silver July futures are up as well. So it's looking good, almost a 7% downtick on Brent. Pankaj Srivastava, Senior Vice President at Rystad Energy, is joining in. Pankaj, I have a very simple question for you. The one thing that US President Donald Trump has been saying incessantly is that the moment this ends, oil prices will collapse. There will be this huge push down. Do you think that's likely to happen?
Yeah, the chances of that happening is quite high, because the moment the Strait of Hormuz opens, we can expect the significant supply push coming from the Middle Eastern countries, and that is going to help the crude prices go down. Because one thing we also need to know that the refineries, at least in the Asia region, which has some of the refineries started utilizing their SPRs. And when the flow will start resuming, we will see that the pressure on the crude prices are going to come down. Another aspect is that is also we need to consider that because of the high prices currently being faced in the at least the Asia region, the demand destruction is happening, and that demand destruction is also going to help in reduction in the crude demand, and that is basically supply demand game is there, and then you will see the crude prices going to drop. And with the geopolitical conditions, but this is not going to happen immediately. It will take certain amount of time due to the normalization of the logistic through Strait of Hormuz, and then certain amount of infrastructure damage has already happened in Middle East. So the full capacity of the crude production coming to the pre-war level is going to take certain amount of time. So our expectation is that if we see a major peace accord happens within a couple of weeks or maybe by end of this month, the normalization process will start from mid of June, and the crude prices are going to be in the range of $80 to $85 by the end of this year. So that is our assumption based upon our internal analysis. And yes, you can see that this is the way Mr. Trump is talking about.
The contention, Pankaj, has been made that the levels that we're seeing for Brent is on paper, and the on-ground reality is very, very different. Availability of physical crude, the prices when transactions are actually taking place, and the movement of crude. So how do you study these two different markets, so to speak? They seem to be operating on completely different triggers.
Yeah, so Brent is, you can see the benchmark crude. So Brent crude production in reality is very, I would say, insignificant amount. So, and that depends upon for the different market. If you're talking about the Asian market will be more interested into the Dubai sort of the crude, that is the medium sour crude. And the European market, which used to rely on the Russian crude, they started processing significant amount of the WTI. So reality will be always be different than what the Brent prices are being shown. So if you see, as far as the India is concerned, our crude cost is significantly higher than what the Brent price is showing. So and the reason is that these are the benchmark crude, but they do not represent the real processing by the individual refineries. So they basically, you compare relative to these crude prices. But still, I feel, and then we whatever we have studied, the Middle Eastern supply is going to release, and then we have to also remember that UAE is coming out from the OPEC plus, and that is going to release another 1.5 million barrels of oil, and that oil will be mix of the sweet as well as the medium crude, so suiting to the Middle Eastern refineries.
Sure.
And then whatever we anticipate based upon the current situation, some more countries are also going to come out from the OPEC.
Yeah.
And those exits will basically loosen the grip of the OPEC on the overall full market supply situation. And then more supply is going to come up, and then you will see the crude prices are going to fall down.
It's actually a pretty...
That is going to happen.
By 2027.
Absolutely. The next one.
Absolutely, Pankaj. We're seeing a fundamental shift in the way that crude will be priced, but the conflict needs to end first for that to pan out. Thanks so much for taking the time. A pleasure having you. Right, let's go across now to my colleague Somit Sarkar, because I'm very certain that there's a lot of buzz in the dealing rooms and he's pretty sure to have gotten some interesting updates for you. Somit, good afternoon. What are you picking up?
Well, few stocks that dealers have highlighted in trade. Firstly, it's Ola Electric. Dealers indicate that the company will be launching its QIP very soon. They have already completed the roadshows and they will be taking analysts and investors for a plant visit this week. So most likely by next week, they might launch their QIPs, what dealers are indicating. Then Yes Bank is another counter. That stock has been buzzing in trade. There are buy flows on the large HNI desk. Dealers are expecting a positive news flow very soon on this counter. For Coforge, that stock has been on a gaining trend, and this is largely in the back of strong set of numbers. But what dealers have indicated is that in and the higher point in trade today, there was a domestic mutual fund who was a seller in this counter. So keep an eye out for Coforge as well. For Hindustan Zinc, multiple dealing rooms have recommended buy calls to their clients based on technical charts. The stock is up nearly 4% in trade. And lastly, it's PB Fintech and LIC Housing Finance. There are buy flows on PMS desk. Dealers are expecting strong Q4 numbers from both the names. For LIC Housing, they have specifically said that there could be a valuation catch-up as well that could happen post numbers. So keep an eye out for LIC Housing as well in trade.
So I mean, just very quickly, any buzz you're picking up about this possibility of a peace deal, or people are just on wait and watch mode?
Sorry, I could not.
The peace deal, the US-Iran peace deal, is that causing some excitement in dealer rooms, or people are wait and watch mode?
Yes, there is some excitement that has come in. In fact, if you look at market, the Nifty has also broken above the 24,300 level. But I don't think there would be too much buying that would come in at this moment, because this is something that we have heard. This is something that we have heard earlier as well, that they are very near to filing. They are very near to signing a peace deal, and then nothing has gone through. So market would remain cautious at this point of time.
I
is
agree.
What dealers are indicating.
I agree. We've heard this song before, that there's almost a peace deal happening, but then does it really happen or not becomes the question. Darvesh Kant, would you also wait and watch? Because here is where FOMO comes in. You have about 10 minutes to go for markets to close, and you don't want to be caught on the wrong side of this rally.
I mean, the FOMO may be valid as well, because Tamanna, one thing is very clear: the market has rallied 2,000 points from the lows on the hope and anticipation that this deal will happen. When it will happen, it has not happened till now. But since it's coming from the third party, it's not coming from Mr. Trump, so the faith is all the more there. To my mind, I think that something must be there in next 48 hours, as has been indicated. And I mean, we are going with a buy on this kind of a scenario, because earlier, any fall in the market in last 4 or 5 days, if you've noticed on a technical ground, it has been bought into quite decisively. So that gives further more confidence. And I think the sectors where the impact was most, maybe the financials came out with a very strong set of numbers, including banks. They should be the first beneficiary out there. For example, Axis Bank, they provided 2,000 crores as a provisioning for this event. That all will be reversed. So though profitability will be far higher. Automobiles as a space have reported good set of numbers. We should be looking onto them, because input price pressure, which was earlier, thought of or being scared of, goes away. At the same time, all the infra plays, L&T is a very good buy. No harm in taking a chance here because these are fundamentally good, stories in the building, good numbers, good order books. I think you should be taking a chance by buying this market at current levels.
Hey, all right, quite a strong statement coming through. You know, the nature of the news wheel is that the breaking news takes precedence. But having said that, one of the biggest stories of the week has to be the victory of Talapati Vijay in the assembly elections in Tamil Nadu. He came out of left field, some might say. Wasn't expected to win, but he has managed to clinch that maximum there, or rather, at least the amount that he did. The question is, a lot of people have, is how much money does he have? What are his assets? How much wealth does he have? And usually, this gets disclosed ahead of an election season. And we have those details for you. In fact, my colleague Nimit is joining in, not just with a breakdown of those assets, but possibly a few breakdown steps as well.
Absolutely, Alex. I've been preparing for this my whole life, but I'm pretty sure that Talapati Vijay is walking to the governor's office like this. From his master movie, which everybody knows about. He is the master now of Tamil Nadu, as we can see. But now we'll discuss how much he really makes. And it's going to shock you because everyone thought a lot of money can be made from movies in Bollywood. But going down south, we can see that Vijay Talapati has built himself quite an empire. Now, if we look firstly at his overall assets, his declared assets, which come from the Election Commission of India before you file to participate in an election, is at 648 crores with a liability of about 7.64 crores. That comes to about 641.22 crores, quite a substantial sum, I would say. And now this consists of both movable and immovable assets. First, let's talk about his cash, which of course, he's 51 years old, but quite Gen Z in that respect, where he doesn't really have a lot of cash declared. It's 1.1 lakh and his spouse is at 1 lakh. So that's 2 lakh in cash, but that's only not even the tip of the iceberg really. Movable assets at 426 crores. The movable assets include stocks, bonds, banks, FDs, all of that. We're going to dive into that in a bit. And its immovable assets include 20 large immovable commercial and residential assets at 222 crores. That brings up the 640 crore mark. Now let's dive into his movable deposits, right? Big deposit heavy guy he is, not big on stocks, and we'll see that a little later, but really big on the banks and the deposits, old school, I would say, at 333 crores of banks and FDs in total. Now if we break this down a little more, that the biggest one there is a bank account at the Indian Overseas Bank. That's a 213 crore bank deposit that he has, just one. Now apart from this, he also has a bunch of different FDs. Axis Bank's fixed deposit at 40 crore. He also has an Indian Overseas Bank account at 25 crores and another one at 10 crores from HDFC Bank. If we move on from this now, you'll see that his equity exposure, surprisingly, which is our bread and butter really, is close to nil. From a 640 crore amount, he has about 20 lakhs, 19.03 lakhs in equity exposure. And this also is, really, it's declared, it's about 3 shares that he holds, Indian Overseas Bank, Jayanagar and Sun Paper Mills. Now, there is, you can see 25,000 worth of shares that he holds, still more than some people, less than most others here. Vehicles, now this is where superstars from the industry really shine. He has a 13.52 crore worth, including a big Tata Caravan worth 6 crores. Look at that beauty right there. Of course, BMW 2.01 crore. He also has a couple of other BMWs thrown in at 80 lakhs, but those are just small ones. Another Lexus 350 worth 3.02 crores that he has, a fantastic car in my personal opinion. And of course, the bling comes with the game itself. 6.47 crore in just bling, jewelry, gold and diamonds. Gold, as we know, especially in times like this, is a great investment. So good thinking there, Talapati. Gold and diamonds, as we say, also a lot of that went from his wife. Now, immovable assets, which we discussed earlier, 20 properties, commercial and residential, including a sprawling mansion overlooking one of Chennai's biggest areas and more expensive areas, I must say, Mylapore. And that itself itself is at about 40 crores or so, and that also has an Olympic-sized swimming pool, which is fantastic because as an actor you must stay in shape. Lastly, a commercial property in T Nagar worth 35 crores just to add to the game. And of course, lastly, he's also declared that his spouse Sangeeta Sornalingam has 18 crore in overall asset divided into immovable, movable, a little bit of stock just like him, and of course the bling.
Oh, fantastic. We want to see a redo of that dance step. I think that was the highlight.
And the hum as well. Oh, there you go.
There you go.
All right,
This is what I've been here for. This is why I took this job.
Completely. I think you're owning it right now, Nimit. Thank you so much. You know, what really struck me is because this individual is going to be running the government of a state which is doing very well financially on relative terms. This is a prosperous state. So the investment philosophy reflects how they think.
Yeah, actually very traditional.
Though superstar Vijay has not come out and spoken to anyone yet, talked about what he wants to do in terms of economics, but this is going to be exciting space to watch.
Absolutely. And particularly also, just to drive home that point, and I went to Coimbatore, there's so much investment that is currently happening in the state, right?
Yeah.
So it's not like it's one of those other states that you have to worry about. Economic policy. I'm going to be
but
very
they say
keen
if
to watch.
you really want to know someone, watch their portfolio, take a look at their portfolio. That's their inner self. So that tells you something about this person. All right, lots of news breaking this afternoon on NDTV Profit. Sources tell NDTV Profit that key Air India board meeting is set to take place in Mumbai on May 7th. And we have details on what those issues could be. CEO succession and financial stress will dominate the agenda. But let me get in Danish to fill us in on all of those exclusive details. Yes, Danish?
Well, that's correct. We have tomorrow a very key board meeting will be taking place at the Bombay House in Mumbai, where the Air India board will be chaired by Mr. N. Chandrasekaran, who is the Tata Sons chairperson. Besides this, we will have Mr. Campbell Wilson, who is the current CEO of Air India, and there will be other board members as well. So initially, what we're learning from our sources is the fact that a proper review will be done of Air India's financial performance in the financial year gone by, and we are also learning that Air India might have suffered losses more than 20,000 crores. So they will be doing a tight scrutiny that what really led to such huge losses. Besides this, they will also be taking certain calls on how the Air India will look like in financial year 27. They could be taking some major calls as far as what sort of recalibration they need to do for the network and what
Danish, we're just going into market close. Danish, we're going to market close, so I'm going to have to wrap this up. But, we're going to come back to you for more details on it. And of course, he'll be on top of that story tomorrow. 2.5 minutes almost to go. Just look at the intraday. That's going to tell you the full story. The bank Nifty, the intraday is where the story is. Nearly 300 points up on the Nifty. A lot of that coming in just the last hour or so. That wall of worry that the markets have climbed. This is one Axios report, but something about this one perhaps is believable because it's not just the Nifty and the bank Nifty or the broader markets or the Indian markets, right? This is all your US futures, your European markets,
crude
your
oil prices.
Your crude oil prices. We should pull up crude oil prices because that's the lead indicator, right? About what a large swath of very powerful investors are feeling about whether the US-Iran war will end or not. In case you missed it, there's a Axios report which says a one-page memo is getting ready for a deal. Alex, 7% down right now.
Yeah, 101, 102. What is critical also, Tamanna, as we wind up is for the Nifty 50 to be holding above that 23,300 mark, which, by the way, has been a very key resistance point. So we're holding, if we hold above that, and of course, the only fly in the ointment, and it's a pretty big fly at that, is that if this gets countered overnight or tomorrow by Iran, then some of this exuberance will get tempered just a tad bit, but it is actually pretty good. The Nifty Bank actually is critical to watch because this is an index that has not participated. Of course, the other big trigger for the Nifty Bank was the credit guarantee scheme that was announced just overnight. And so we were talking about it this morning, the need for a trigger for the PSU banking pack as well as for the Nifty Bank that is in place. And this is another one.
Yep. We should just pull up the advanced decline ratio, the intraday chart through the day, and then we'll come to the sectoral heat map because you need to see what has been contributing. Look at that yawning gulf. It's actually beautiful, almost how it was in the start of the day, but even better right now. 582 declines to 2037 advances on the broader markets. The sectoral heat map will give you a picture of what's working the best. CPSE a little muted, energy stocks to some extent. You'll see a cool off in an ONGC, etc., maybe FMCG major. But look at the banks. The banks and the financial services, right, are front and center of this rally, isn't it?
Absolutely. The PSU banking pack. There are a few earnings that have also come through in the interim, but I think more than anything else, there's that comfort that the government is stepping in like it did during COVID-19 to say, look, we'll provide you with a guarantee. You can lend a little bit more, provide working capital where required to give these MSMEs, the export-facing MSMEs, the time to tide over a rough period. But a few seconds to go for the close, and we are ending very, very well. Very critical to note, by the way, the Nifty mid-cap index, if you can pull that up very, very quickly, right? So we're at 25,572 or thereabouts. We're just a few inches away from all-time highs for the mid-cap index.
22,570. Just the Nifty heat map before we wrap up and what the big boys have been doing and how we're closing off. Indigo, there's just zooming past. 7% up. You know, of course, low crude prices always help. This is the big proxy play for that, and the Air India board meet and troubles at their big competitor could be also helping in that sense. The India VIX is 7% down, under 17. That's an important marker to look at. ONGC expectedly will come down as crude prices cool off. RIL will come down as crude prices cool off. So that is to be expected, but not really anything to be sad about. Tata Motors, PV, Shriram Finance, Trent, Asian Paints, again, something that benefits from crude, all looking strong. So you need to go into tomorrow's trade looking at a couple of factors. Britannia, Bajaj Auto and the likes will report, so that becomes important.
And the bonus possibly from Bajaj. Oh no, buyback.
The buyback from Bajaj Auto is what everyone will be looking at. But also keep in mind that a lot of news flow could take place between now and tomorrow morning's market open. So watch out for all that and more. Let's hope that this mood really stays on.
Absolutely. And on that note, from Tamanna and myself and the team that put this show together, thank you so much for watching and stay tuned. This is NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. Editor's Cut, every first. Editor's Cut, every first.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a lowdown of everything that has happened in terms of today's trading session, but as well as news and updates from within the country and across the globe. First things first, let's take a look at the markets. Then Dalal Street shrugs away volatility to really end higher with bulls taking charge, especially late in the session. Now, when you talk about the Sensex, that really climbed over 900 points. Nifty held firm above 24,300 and signaled that really improving sentiment despite a choppy day of trade. Moving on then, let's talk about sectors. Now, sectoral action largely remains in favor of green. All sectors end on a positive note, and that's barring Nifty Energy as well as FMCG. Moving on then, the US and Iran are closer than ever to ending the war, with Axios reporting talks around a one-page MOU as well that could halt hostilities and open the door to nuclear negotiations. And that's something that markets were looking at, in fact, and the draft would trigger a 30-day window for talks, ease sanctions as well, and pause uranium enrichment, as well as reopen the shipping through the Strait of Hormuz. But nothing is signed just as of now. Divisions inside Iran and fragile trust mean that diplomacy is narrowly winning over renewed conflict, at least for now. Moving on then, let's talk about the impact of this also on oil prices. Now, oil slumped for a second straight session as peace hopes trumped war risk as well. And you do have Axios reporting that the US and Iran are close to a one-page framework, like I said, to end the conflict. And that's something that sent Brent as well as WTI sharply lower. Other than that, in terms of the backdrop, you do have President Trump who's paused ship escorts through the Hormuz, but with blockage still very much in place. Traders are betting that diplomacy cools prices faster than barrels can return. Moving on then, let's talk about gold as well. That pushed to a one-week high as diplomacy really lifted sentiment. Optimism around a possible US-Iran deal is what you're looking at, that dragged oil and the dollar lower, and as a result made bullion shine as well. Now, in terms of prices, You're looking at somewhere close to $4,700, but analysts are warning that fresh highs may need big institutional money, not just fading war risk, but that's something that you're looking at. Other than that, gold prices were close to a one-week high. Moving on then, let's talk about banking stocks that saw broad-based buying after the Union Cabinet really approved the emergency credit line scheme as well. And in terms of this scheme, you're looking at $18,000 thereabout in terms of the outlay that is expected to unlock about 2.55 lakh crore rupees of fresh credit. And this is for MSMEs, airlines hit by the Middle East crisis. And the move is, it lifted sentiment across both private and public sector lenders on some of those expectations of higher credit growth as well as lower asset quality stress. Moving on then, let's talk about Polycab that reported a strong set of numbers in the fourth quarter. Now, the stock wasn't doing all that much, but it was supported in terms of the earnings fine print by healthy demand across segments. Though margins declined, at least on a year-on-year basis, profit growth, now that remained modest despite higher EBITDA, reflecting margin compression. And the company also announced a 47 rupees per share dividend, extended the CFO's tenure, signaling continuity as it navigates cost pressures alongside top-line momentum. Moving on then, let's talk about CG Power that reported a strong set of numbers, and that's marked by healthy revenue growth, margin expansion as well that you're looking at. Revenue and EBITDA rose sharply on a year-on-year basis, aided by operating leverage, while the net profit also grew over 30%. Improved execution and cost control is something that you're looking at, helping lift the margins, reinforcing the company's steady growth trajectory amid a favorable demand environment. Moving on then, let's talk about L&T that was under pressure and ended the day with a cut of about 1%. And this, of course, after the result. But in terms of the brokerage verdict as well, Nomura downgraded this particular counter to a neutral rating, citing a muted fourth quarter performance and underwhelming guidance. Now, in terms of what else the brokerage had to say, they talked about how they've cut the target price sharply after trimming FY 27-28 earnings estimates. Nomura has flagged weaker visibility on order inflows under the Lakshya 2031 plan, said that elevated valuations offer limited comfort amid near-term uncertainties. Let's move on and talk about brokerages staying largely positive on M&M after its Q4 performance, even as some flagged margin and tractor side pressure. Kotak Securities maintains a buy rating with a target price of close to 4,000 rupees, backed by strong pricing and auto strength. When you talk about JP Morgan as well, remaining overweight on this particular counter, and their target price is somewhere close to 4,100 rupees. Robust SUV volumes is something that they're talking about, and that's along with steady guidance. Now, when you talk about the word coming in from Jefferies as well, they're keeping a buy stance, trimming their target price to somewhere close to 4,000 rupees again here as well, amid tractor cycle concerns being flagged here. Citi also maintaining a buy rating, lifting its target price to somewhere close to 4,400 rupees, citing margin improvement as well as a confident management outlook. Moving on then, let's talk about United Breweries that delivered a mixed set of numbers for the fourth quarter, with growth held back by rising costs even as volumes improved. The company sees better than expected volume growth and a strong premium portfolio, but higher fixed cost and bottle expenses that really weighed on the margins. Management also warned of elevated cost pressure over the next few quarters due to global disruptions, which could really weigh on the near-term profitability. Moving on then, let's talk about United Spirits that reported a steady set of numbers for the year, driven by premium brands, even as mass segments remain a little bit under pressure. Now, sales growth that moderated in the March quarter, but the full year performance stays resilient on stronger realizations, and the company continues to see healthy traction when it comes to their prestige and above portfolio, while the demand in the popular segment, in fact, remains a little bit weak. Moving on then, let's talk about Coforge that surged more than 9%, about 10% at close as well after a strong fourth quarter performance and upbeat operational commentary. When you talk about the margins, they expanded on a meaningful basis on tighter cost control, while deal momentum remains healthy with multiple large wins that you're looking at during the quarter. The company also reports a stronger order book for the year going forward and reinforces this particular confidence in the near-term revenue visibility and growth, and that's something that you can very clearly also see being reflected in the stock price as well. Moving on then, let's talk about SRF that jumped more than 7%, almost 7.8% at close after a solid fourth quarter number as well. And when you're talking about the key triggers, what makes it to the list is strong growth, and that's across key businesses. You're talking about fluorochem, technical textiles, and films really driving earnings with sharp improvement when it comes to operating profits, especially in films and textiles. Now, the fluorochem business benefits from higher volumes and better pricing, and the company signals further capacity expansion in this segment. Moving on then, let's talk about Hero MotoCorp that slipped into the red after early gains. And this is as management flagged near-term pressure when it comes to the margins from rising commodity costs, while the two-wheeler major also posted record revenue and profit also coming in for the fourth quarter. You do have investor sentiment that cooled off a little bit during the earnings call, and the company stressed that cost inflation could really drag on margins. And that's for the coming quarters. Now, at close, of course, you did have the stock with an uptick of about 1% thereabout, and this is even as demand momentum and volume growth remain strong. Let's also move on and talk about brokerages remaining constructive on something like a Hero MotoCorp as well, and this is after a largely strong set of numbers. Now, JP Morgan and Morgan Stanley have maintained their overweight ratings, citing effective pricing and fixed cost management that helped offset commodity pressures. Citi also reiterated the buy call, flagging robust demand post GST cuts and some of those gradual gains when it comes to scooters and EVs. That said, analysts are closely watching sustainability when it comes to industry growth, market share momentum, but also evolving cost pressures. Let's also move on and talk about KAC International that has secured new orders to the tune of about 1,000 crores, strengthening its transmission and distribution order book across India and the Americas. Now, when you talk about these key wins, it includes a high-value 500 kV HVDC project in West India, cabling works in East India, and tower and hardware supplies in the Americas. And this underscores, of course, the strong momentum in grid infrastructure and international markets. Moving on then, let's talk about DCX Systems that in collaboration with Israel Aerospace Industries has broken ground on a new radar manufacturing facility in Tamil Nadu, and the plant is designed to serve as a hub for manufacturing, but also integration and testing of advanced radar systems, marking a significant step in strengthening India's domestic defense electronics and radar production capabilities under global partnerships. Moving on then, let's talk about Premier Explosives that has received export orders to the tune of about 34 crore rupees for the supply of rocket motors, marking a boost to its defense exports portfolio. Now, the stock wasn't doing all that much, but the contract, when you talk about this one, it was secured from an international client, is going to be executed over the next 18 months and strengthens the company's presence in high energy propulsion systems for global defense applications. Moving on then, let's talk about Zee that has stepped up its legal push in the ongoing copyright dispute with Nykaa at the Delhi High Court. Now, sources are telling NDTV Profit that Zee is seeking a wider undertaking to prevent any future misuse of its music catalogue beyond the takedown of limited set of social media reels. The media company is also pressing ahead with its damages claim, with the next court hearing also scheduled later this month, so this is something to watch out for. Moving on then, let's talk about rice exporters that are coming under sharp pressure as a surge in shipping costs squeezes margins. Now, sources in fact are telling your channel also that exporters are seeking government relief as basmati export prices rise sharply, driven entirely by freight costs rather than any shortage at this point in time. With price controls in key overseas markets limiting pass-through, exporters are now pushing for faster reforms under the Merchant Shipping Act to ease the stress. Moving on then, cost pressures are now clearly moving through the apparel value chain. Industry sources are telling NDTV Profit that textile companies have already passed on over half of their higher input costs to apparel makers in the month of May, with full pass-through likely over the next couple of months as well. Now, garment prices are beginning to rise, with smaller players feeling the pinch even more, even as leading retailers hold back hikes just for now. Moving on then, let's get you some business news. Air India is sharply cutting international flight capacity as rising global crude prices and widening ATF cracks squeeze costs as well. And data from OAG is showing that international capacity fell over 20% on a year-on-year basis in the month of April, with further cuts planned for May and June as well. Now, North America and Europe have been hit the hardest as the airline prioritizes cost control amid a challenging fuel environment. Moving on then, Indian companies stepped up investment commitments in the United States, with 12 firms announcing $1.1 billion in fresh investment at the Select USA Investment Summit. And the pledges are also expected to create over 1,500 American jobs and form part of a broader $20.5 billion commitment. This is across tech, manufacturing, pharma, and Indian FDI into the US now totals over $16 billion, underscoring deepening economic ties. Moving on then, let's talk about Samsung Electronics that has crossed a $1 trillion market valuation powered by surging demand for AI chips, and shares rallied, of course, sharply, making Samsung only the second Asian company after TSMC to reach the milestone and lifting South Korea's Kospi as well above the 7,000 mark in the morning. Alongside peers like SK Hynix and TSMC, Samsung now sits at the center of Asia's growing dominance in the global AI and semiconductor ecosystem. Moving on then, let's talk about Freshworks that announced it will cut about 11% of its workforce, so roughly about 500 jobs, as it restructures operations amid rapid adoption of AI. The company said that automation and AI-driven coding have reduced routine work across teams. And shares, of course, fell sharply after this particular announcement, even as Freshworks really said that savings will be reinvested in its core employee experience and IT services business. Moving on then, let's talk about AI. OpenAI and Anthropic are accelerating efforts to drive enterprise adoption of AI by forming JVs with major global financial institutions. Both moves aim to help businesses deploy AI tools more effectively through hands-on support, with billions already invested and IPO ambitions looming as well. Boosting real-world adoption is now critical to turning heavy AI spending into sustainable profits. Moving on then, let's talk about BlackRock CEO Larry Fink also, who's warned that global shortages of compute power chips and even memory and electricity could really give rise to a new tradable asset class as AI adoption accelerates. Now, speaking at a conference, he's talked about how demand for AI infra is far outpacing supply, arguing that this is not an AI bubble but a supply-constrained market, even suggesting that futures trading tied to compute capacity is something that could be on the horizon as well. Moving on then, let's talk about Apple that has agreed to pay $250 million to settle a class action lawsuit, in fact, accusing the company of misleading customers over its AI features. Now, the case was centered on claims around Apple Intelligence, including promised enhancements to Siri. While Apple has not admitted any wrongdoing, at least at this point in time, eligible US buyers of iPhone 15 and even 16 models could really receive payouts anywhere between $25 to $95. On to some national news then. Panic spread across parts of Punjab after two blast-like incidents were reported within hours in Jalandhar and Amritsar. Now, in Jalandhar, a scooter parked outside the BSF Punjab Frontier headquarters caught fire and exploded on a busy stretch near the Amritsar-Delhi highway. Hours later, another blast-like incident was reported near the Khasa cantonment area in Amritsar. Now, police, army, and forensic teams rushed to both sites, sealing the areas and launching investigations, with the state being placed on high alert. Moving on then, on to some international news. US President Trump has also paused Project Freedom, the operation to guide stranded ships through the Strait of Hormuz, saying that the halt is temporary to allow space for a possible peace deal with Tehran. Now, when you talk about this US blockade of Iranian ports, that remains in place even as Iran claims the move as a victory. The Pentagon is saying that more than 22,000 mariners on over 1,500 vessels remain trapped, with ship traffic still largely frozen. And you do have Secretary of State Marco Rubio, who said that the offensive phase of the war is over right now, though Tehran has yet to respond. Iran, though, has rolled out a mandatory new transit protocol, so let's talk about that as well. Now, this is for ships crossing the Strait of Hormuz, requiring vessels to seek permits and follow IRGC designated corridors. The move is coming in as President he rejected the US conditions to reopen the waterway as unrealistic. The timing is critical, coinciding with President Trump's brief launch and pause of the Project Freedom as well. And in terms of the US mission, this is aimed at escorting neutral ships, and that's something that you're looking at that we just told you about. But together, the steps signal Iran tightening control even as diplomacy hangs in the balance. Moving on then, let's talk about Iran's Foreign Minister Abbas Araghchi as well, who's met China's top diplomat in Beijing. Now, this highlights growing coordination between the two strategic partners ahead of Donald Trump's expected visit to China. It is Araghchi's first China trip since US and Israeli strikes triggered a historic global oil supply shock. While no details have been disclosed as of now, the timing suggests that Iran will feature prominently in talks between President Trump and President Xi later this month as well. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
In the Middle East war, a big update coming in today. White House signals US-Iran deal to end war near closing. Both sides are setting a framework for nuclear negotiations. US awaits Tehran's response on war and nukes. Oil prices fall sharply on reports that US and Iran are closing in on a deal to end war, pushing Brent towards $101 a barrel. Markets surge in late trade on US-Iran peace deal hopes. Nifty ends above 24,300, while the rupee rebounds to near days high after a sharp recovery and closes at 94 rupees 61 paise against the US dollar. US Secretary of State Marco Rubio to visit India soon. US envoy Sergio Gore says, meanwhile, India Inc. announces $20.5 billion of investments in US. Pharma leads with $19 billion push. Reliance to shut crude unit after Naira maintenance ends. Government says Reliance refinery shutdown won't have any impact on LPG supplies. Rising fuel costs hit Air India. Amid high fuel prices, Air India reduces international operations. The airline has cut overseas capacity by 22% as compared to last year in April. Rice exports feel the shipping blockade heat. Sources tell NDTV Profit that the exporters are seeking urgent shipping relief from the government as basmati export prices surged to $1,300 a ton. NDTV Profit tracks Bengal mood after the election verdict in West Bengal, shifts the power map, and also NDTV Profit's Sharad Dubey brings in exclusive industry voices from the ground zero in Kolkata. Sources say TVK's Vijay will take oath as Tamil Nadu Chief Minister tomorrow, likely to take oath alone. Meanwhile, Vijay intensifies the allies' outreach after Congress TVK writes to VCK and left parties. Hello and welcome. You have tuned into Profit 360. I'm Nisha Poddar. And in a big development today about a couple of hours back, well, it's coming in from the Middle East. US is getting close to an agreement with Iran on a one-page memorandum of understanding to end the war and set a framework for more detailed nuclear negotiations. Now, the US expects Iranian responses on several key points in the next 48 hours. Nothing has been agreed yet, but the sources said that this was the closest the parties had been to an agreement since the war really began. Among other provisions, remember, the deal would really involve Iran committing to a moratorium on nuclear enrichment, the US agreeing to lift its sanctions and release billions in frozen Iranian fund. And both sides really lifting the restrictions around transit through the Strait of Hormuz. That will be a big relief for the world. Now, this after Trump announced the HALT project, Freedom, that US had really launched with considerable publicity. But recently, remember, a French commercial vessel has been targeted in the Strait of Hormuz. To understand the impact now of this, we have with us Robinder Sachdeva, who's the foreign affairs expert, joining in now to put more perspective into this. Robinder, how much do you make of this US-Iran deal getting close?
Well, the possibility is always there. The question is, what is the probability? Okay, and yes, it seems that there is some increasing probability, but to my mind, any such deal will be a half-baked deal. If it's only capping the enrichment, for example, right, it does not give Trump the trophy or the prize that he desperately wants, which is to claim that he was able to lift up and take away the highly enriched uranium from Iran. So does the uranium stay within Iran? That would be a victory for Iran. And that would not be a victory for Trump. But yes, given the situation where the US is and where this whole, impasse is, it could be, as you're mentioning that, partial solution to the nuclear problem. That is, Iran could promise, I will not enrich any further, but it still has all of those, which was a primary reason for which the US and Israel went to war. Secondly, yes, Hormuz is a simpler deal.
That's right.
The issue.
Yes.
Sorry, yeah.
So, Robinder, out of all this, what we are concerned about a lot is the Strait of Hormuz. And with your expertise in these kind of negotiations, how does it really transpire? Of course, now US is not in a position with the global pressure, with their own internal political, maneuvers, as well as midterm elections, their own economic, overbearing thoughts and pressure points. Given all that, I don't think US is looking at an upmanship over here. They are more under pressure to end this war at the current moment and get Iran on the table to negotiate and to come to some conclusion. Looking at all this, how do you say that probably Strait of Hormuz is a simpler affair, because that became the biggest bone of contention and biggest weapon in the hands of Iran in this particular war?
See, the Strait of Hormuz was never known as a weapon. It's only due to the war that a new super weapon has been born. Right. Before the war, the only issue was Iran's nuclear, enriched materials, the status of Iran's missile development plans, long distance, what range can they go? Those are the two main issues America and Israel had. And also, of course, Iran should stop helping out the proxies, so to say, right, Hezbollah and others. But once the war started, we've seen the birth of a new super weapon, due to which the entire focus has now shifted to this new super weapon. And this is really a super weapon in the sense that Iran will now always want to have dominance and will have dominance over it, even if this is a half-baked deal. Iran can say, okay, fine, I will lift my blockade, you lift your blockade. Okay. A simple equation there, right? Fine, commercial and shipping flows. But any day when Iran wants, it could then again dial up and say, you know what, I'm again shutting down the straits. When the entire firepower of America, the firepower of Israel over 40 days or whatever of the war could not demolish this super weapon, let's say, right? So this super weapon, again, sorry to repeat so many times, is battle tested and has proven its worth. So Iran would now have an upper hand on the Strait of Hormuz, which will mean that the Gulf countries would be forever or for a long time living in the shadow. So that's the other, the other dimension of this whole peace deal, which if it happens, the Gulf countries will not be happy with it at all.
That's right. So in effect, even if this war ends, Robinder, it looks like that Iran has come out stronger after this particular war, even if it ends. How do you think the maneuvering and India's position will play out if this deal happens in whatever small fashion, at least to have peace in the Strait of Hormuz and to open it completely for trade?
See, yeah, the Strait of Hormuz, if this deal happens, it's once again, I'm saying, to my mind, it will only be a tentative deal. It cannot be a deal which will be a sustainable deal. Okay, but yeah, sure, assume that America is tired, Iran has the upper hand, and America, for all intents and purposes, is not able to extricate itself. So it's saying that, okay, fine, let's make a deal of some sorts. It will be a tentative deal. But yes, what India can benefit from it, obviously, will be that, the strait would be open, our LPG, LNG supplies would start coming in. But remember, even if the straits open up today, it will take at least 2 to 3 months to come back to a normal or even more than that. Because shipping takes time. And also remember that the production facilities of many of the Gulf countries, including Qatar's about 17-18% of LNG production has been destroyed for the next 3 to 5 years, according to Qatar itself, right?
Yes, yes.
So the production of crude oils, the production of LNG, the LPG and all, even if it starts today, will have an impact in the Indian market, not the stock markets, but let's say in the households, not before the next 2 to 3 months at least.
That's right. That's at least the time for recovery. But the sooner it ends, at least the recovery will start. That's the hope we are living with. But thank you so much, Robinder, for joining in with your expert take. Thank you. All right. So crude prices, that is the most important thing right now with the US-Iran deal coming close as per sources. So crude prices have slumped sharply after this particular news came in, with Brent now hovering around $100 to $102 per barrel range, while the WTI index has slipped to $93-94 per barrel mark. Now, the sharp fall comes amid the growing optimism over a possible US-Iran peace deal and expectations that supply from the region could really normalize. Back home, remember, rupee has been really dancing to the tune of the crude oil prices. So rupee closed at 94 rupees 61 paise against the US dollar, tracking the sharp move in the global oil prices. So it is really coming below 95 levels. That's a good news coming in for the rupee movement. Let's also look at the Indian equity markets, and they surged on the back of easing geopolitical tensions in the last 1 hour of trade. With this particular hope of US-Iran deal being struck, that coming in, the markets really surged, with Nifty 50 closing above 24,300 level, led by gains in auto as well as aviation stocks. The rally comes amid the reports of progress on the possible deal, which has really lifted the global sentiment as well. Let's take it across to Jasmeet Singh, who's standing by with all the details of the market action today. Jasmeet, looks like quite an eventful day of trade, especially in the last hour.
Well, a good day for markets today. Nifty ends in green and gains about 1.2%. If you look at the overall number, Nifty ends above the 24,300 mark. Now, in terms of top gainers in Nifty 50, we have stocks like Indigo and Tata Motors gaining the most. It's gained over 5%. If you look at the broader market, it has outperformed the benchmark in today's trade, where Nifty Small Cap 250 and Mid Cap 150 both gain and end in green. While Nifty Small Cap 250 and Mid Cap 150 gain about 1.8%. If you look at the top gainers in Mid Cap 150, we have stocks like Coforge and Yes Bank gaining the most. In terms of Small Cap 250, we have stocks like Valcor, is a top performing stock in Small Cap 250. If you look at the key sectors, well, all sectors end in green, barring Nifty FMCG and Nifty Energy. While Nifty PSU Bank and Nifty Realty are among the top gainers, gaining about 2.6%. And in terms of the top performing stocks in Nifty PSU Bank, we have something like SBI and Union Bank, both gaining the most in Nifty PSU Bank. If you look at the key trends, well, Nifty PSU Bank snaps its 5 days of losing streak and gains in today's trade. In terms of Nifty Auto, it gains for the 3rd consecutive day in a row, while Nifty Pharma gains for the 5th consecutive day in a row.
All right, thank you, Jasmeet, for all those important details. Now, Reliance Industries will be shutting down one of its refinery units in the state of Gujarat as part of its annual maintenance exercise. The Joint Secretary, Sujata Sharma, said that the shutdowns are being staggered to avoid the domestic supply disruptions, while Naira is expected to resume full operations by mid-May. Listen in to what she had to say.
Shutdown, turnaround, these are the normal, part of operation as far as refinery is concerned. And we in the ministry try to ensure that all the shutdowns don't happen at one time. So it has to be scattered so that the supplies for the country, for the domestic market is not affected. And that's what we are ensuring now also. You know that right now Naira refinery is under shutdown, and by mid of this month or before that it will come back, and then the Reliance shutdown will start. And generally, it takes 4 weeks or around 4 weeks for a shutdown to complete.
All right, the high fuel prices, that's been a pain point, and also the widening ATF cracks are forcing Air India to cut back international operations. Now, the airline has reduced overseas capacity sharply since the month of April, with deeper cuts planned through June as cost pressures remain high and also weigh on the long-haul routes for these airline companies. Now, Danish joins in with exclusive details on the cut downs and how it's impacting the airlines. Danish, tell us.
Well, that's correct. As per exclusive data shared by OAG to NDTV Profit, Air India had cut flights by 22% in the month of April. In the current month, that is May, Air India will be reducing flights by 20%, and these are all the international long-haul flights which are majorly being the frequencies which are being reduced. If we look at the North American flights, especially the flights to the East Coast to New York and Newark, those flights have been completely cut from the schedule. Besides that, the frequency to Vancouver from India, from two destinations to Vancouver, even those frequencies have been reduced. Similarly, the airline has also reduced flights to Europe, and but if we compare the flights that have been cancelled to Europe and to North America specifically, the major cut is only seen in the North American part. As far as Europe is concerned, over there certain frequencies have been reduced. For example, the frequency from Amritsar to Birmingham, that has been reduced, and similarly Ahmedabad to London Gatwick has also been reduced. And if we look at the other destinations across Europe, flights to Paris, Milan and Rome, these have also been reduced. And the major reason why this is happening is it is because of the high ATF prices, especially the widening crack, and that is why it has happened. Plus, moreover, Air India is also expected to continue cutting down flights in the month of June and July as well. So all in all, if we see, this is really negative for the passengers, because if the frequencies get reduced, it means that the capacity is reducing, which will translate into higher airfare. So over here, while the airline is trying to save its cost, but the passengers are at the end, and they're facing a lot of challenges because of high ticket prices.
All right, Danish, thank you so much for all those details. So it's difficult times there. And also a crucial board meeting at Air India is set to take place in Mumbai on 7th of May, with CEO succession and mounting financial stress really expected to dominate the discussions in that boardroom. Top leadership, including N. Chandrasekaran and current CEO Campbell Wilson, will be present in that meeting. Sources indicate that former Vistara CEO Vinod Khanna and Air India's Chief Commercial Officer Nipun Agarwal have emerged as key contenders for the top job after Campbell leaves. Now, this comes at a time when Air India is estimated to have posted losses of over 20,000 crore rupees in FY26, with FY27 also expected to remain financially challenging amid the elevated fuel costs. Now, the board is likely to take a call on the next CEO, even as Campbell Wilson continues in his role until a successor is appointed. So big changes there expected at the top brass and to be on the watch list when it comes to Air India. Moving on then, rice exports and they feel the heat. Sources tell NDTV Profit that exporters are seeking urgent shipping relief from the government as basmati export prices surge to $1,300 a ton. What's really driving the spike and what the industry is asking for? Let's take it across to Nimit, who gets us the full story. Nimit.
Yes, absolutely. So rice exporters tell us exclusively that what they're facing right now is a shipping crisis, not a commodity or demand crisis. They have the goods, they have the rice. India's always been a big exporter. The government has taken some measures, but because of the huge rise in freight, which they say moves from $550 to about $3,000, a 6 times increase. Because of that, rice costs have gone up by about $200 a ton to about $1,300 in some cases. Earlier, it was about $1,100 pre the conflict. When the conflict started, it moved to about $1,200, and now in some cases it's at $1,300, which is a huge increase. Now, what they ask for is not a case-by-case solution as the DG Shipping has been doing. The DG Shipping, they say, has been doing a great job in addressing the concerns, but because these shipping lines are so large, they sometimes take advantage of especially the medium and the small rice exporters, if not the large ones. But what they say essentially is they want a faster rollout of the Merchant Shipping Act 2025, which came into effect last year, but it has not been rolled out yet. They also say that this Merchant Shipping Act provides for clear, transparent shipping and pricing guidelines. Now, with this price going up, they also say that freight accounts for 15% of the total basmati export pricing. They're not able to totally pass on this price to all the countries and all their customers in the Middle East, specifically because countries such as the UAE and Qatar limit the price and they can't pass that cost on, so they're having to absorb that cost. So they ask for quick action and immediate action, as well as a long-term action in terms of policy changes, creating transparent pricing and shipping guidelines, so they have a more arm's length and transparent, predictable relationship with the shippers.
All right, thanks Nimit for that. That's a grave situation. Now moving on, Indian companies have announced a massive $20.5 billion investment pipeline in the United States at the Select USA Investment Summit. In fact, this signaling deepening economic ties between the two countries. The headline driver is the pharmaceutical sector, accounting for over $19 billion. My colleague Rishabh now joins in with all the details on this big, huge investment push in the United States of America. Rishabh.
We've been discussing an India-US trade deal for over a year now, but another aspect of this deal is, of course, the sort of FDI outflows in terms of what Indian companies are now starting to invest in the US as part of a lot of reshoring that the US also wants to do. And as part of that, the US hosted something called as a Select USA Summit, which has announced that about $20.5 billion are being invested in the US by Indian companies. The charge is, of course, being led by pharmaceutical companies. That's something that the Trump administration has also been very bullish on in terms of having more of these generics being made within the US rather than being exported to the US from various countries. So leading the charge is, of course, Sun Pharma's $11.7 billion acquisition of Argonon. That is something that constitutes a large chunk of the investment. Apart from that, you have Aurobindo Pharma, Biocon, Cipla, Dr. Reddy's, Lupin, Zydus, all of them investing certain amounts in the US. And out of the $20.5 billion, about $19.1 billion come purely from pharmaceuticals. Apart from that, JSW Steel is set to invest roughly $255 million in Ohio, as well as Texas for capacity modernization. You have the Abhyudaya Group out of Gujarat. They will invest about $900 million across 5 US sites. You have Jindal Pipe. They will invest about $87 million in Texas. Apart from that, you have a bunch of very small announcements as well from Jivo Wellness, about $15 million. Sterlite Technologies among the notable ones. They'll invest about $100 million. Apart from that, you have some smaller $2 to $5 million sort of investments coming in from various industries. So a lot of sort of SOPs also being given to these companies to help them bring in a lot more jobs. And this is what the Trump administration is also pushing for in terms of more job creation within the US. So that's what we're seeing when it comes to the Select USA Summit.
All right, Rishabh. Of course, for the Indian pharma companies, US is a big market, so some payback in terms of investments as well. Now, post the election verdict in the state of West Bengal, what is the real mood on the ground? NDTV Profit Sharad Dubey is in Kolkata speaking to the industry leaders to gauge how businesses are really reacting to the change in the government and also the political ideology over there. Sharad, what are you picking up from the ground? How is the industry viewing this particular shift? What lies ahead? Sharad, tell us.
Well, this is the final vibe check in Kolkata, and it seems like the sentiment has changed. Over the last 2 days, we had conversations with legacy business owners, listed players, and even startups. And the main crux is that Bengal is hopeful right now. And yes, there are some demands to be made, some bottlenecks to be corrected, but overall there is a strong enthusiasm when it comes to the sentiment, especially on the economic development front. And that's all we have for our Kolkata tour at NDTV Profit.
All right, so that's our colleague Sharad really reporting straight from the heart of West Bengal. Kolkata and economic development, the big push to that with the political shift is what is expected. Now, major political standoff is unfolding in the state of West Bengal as well, with Chief Minister Mamata Banerjee refusing to really resign despite the election outcome going against her party. Now, Mamata has questioned the credibility of the results, alleging manipulation and also asserting that her party has morally won the mandate. So that's Mamata Banerjee for you. All right, after the blockbuster debut victory, TVK chief Vijay has now staked claim for the Tamil Nadu government. While huddles continue for support in numbers, Vijay stakes claim to form the government, meeting Tamil Nadu Governor Rajendra Arlikar at the Raj Bhavan. Now, sources suggest Vijay is set to take oath alone tomorrow as preparations at the Nehru Stadium in Chennai really continue. All right, let's take it straight across to our colleague Shiv Arur for more on this. Shiv, good to join. It is expected that Vijay will take oath as the Chief Minister tomorrow. How does the preparations look like, and what else are the sources really telling you?
Well, preparations are on in full swing here at the Chennai Indoor Stadium. This is the stadium that you see behind me. That's the stage on which Vijay will be the sole person taking oath tomorrow as Chief Minister of Tamil Nadu. We do know that Rahul Gandhi is going to be here. That new marriage, political marriage between the Congress and the TVK has been forged. It's been formalized right now. There are tremors, of course, on the national stage over what happens between the Congress and the DMK. But the new Vijay government is set. They've taken claim. We don't know who's going to be in the cabinet just yet. But this entire stadium is going to be filled with over 5,000 people tomorrow. I don't know how they're going to keep away from, keep the fans away. There are so many people who will want to attend.
There are so many people who will want to attend the ceremony beyond just the VIPs. And Vijay, who has positioned his party as one that is not one of VIPs, doesn't give in to VIP trappings. There's a great deal of curiosity over how he's going to keep away the absolutely enormous fan base that he has. They're going to be lining up the streets tomorrow, welcoming him to the Nehru Stadium for that oath-taking ceremony. But the government formation itself, beyond the ceremony and the spectacle that we see tomorrow, as we've been reporting here on the NDTV network relentlessly from Chennai, government formation is a little bit more complicated. It's a story in motion right now. The Congress adds 5 seats to Vijay's tally, but he does need more seats in order to stake claim. He's been given 2 weeks. He's asked for 2 weeks to prove his majority. Everyone knows that this is a Vijay government. Nobody really has the muscle to demand anything or any bargaining power as Vijay is concerned. So this is the beginning of the Vijay government, and this is the stage where it's going to begin.
Right, Shiv, we can see the excitement. We can hear that in your voice as well. And tomorrow it will be electrifying as well. Thank you so much for getting us all those exclusive details. With that, completely out of time on Profit 360. Thanks so much for tuning in, and keep it with NDTV Profit.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On India.
Presented by Canara Bank. Together we can.
Hello and welcome to Know Your Company. I am Mahima Vajrajani and we are going to take up a very interesting company today that we are going to try to decode in this episode of Know Your Company. The company that I'm talking about is Aadhaar Housing Finance. Now, of course, it did come out with its Q4 numbers, but we're going to we're going to do a deep dive analysis of how this housing financer is doing. Basically, as a housing financer, mortgage-related loan products, what is its forte in terms of the loans. Basically it is for residential property purchases and construction. A lot of its loan book is from the salaried segment as well. Home improvement and extension loans is also something that the company provides. Loan is also they also provide loans for commercial property construction and acquisition as well. So these are the different segments of the loans that they give. Focused on low income housing segments, the ticket size largely is around that 10 to 11 lakhs. In terms of the loan book, 100% secured retail loan book is what they have. And this is of course the brief about the company. In terms of product mix, around 27% is LAP and around 73% of their loan book is retail home loan. So that is the big chunk of their entire loan book. In terms of how the geography and reach is, around 22 states is where the company has its presence, and it's got a vast expansion in terms to branches. Around 626 branches is what the reach looks like overall. So this is the overall view of what the company does, how is the reach, how is the geography as well. Now in terms of the parameters that we're going to talk about when it comes to Aadhaar Housing Finance and as to how we're going to rate the company, let's take a look at those 8 parameters. The first one is going to be the income statement that we're going to talk about. We're going to talk about the balance sheet. We're also going to talk about the operational metrics here as to how yields are, how ROAs are faring for the company. We're also going to talk about how asset quality is looking like, what is the guidance looking like going forward. Shareholding, this is a very strong company backed by Blackstone. Street cred, how has the performance of the stock been in the last 1 year? How has it been performing in the last couple of months? We're also going to talk about valuations as compared to peers. How is this company doing? Whether a slightly higher valuation is justified or not is something that we're going to talk about. And the last metric is the guidance given by the management. They're maintaining a strong guidance going forward in FY27, and we're going to quiz the management as well with regards to how this guidance fared. But let's start with the income statement first. Let's try to pull those metrics up. In terms of the net interest income, the 3-year CAGR has been at that 23% mark. This shows that there is solid loan growth, plus the spreads also looking very nice. In terms of the credit costs as well, the credit costs are relatively controlled, slightly inching up, but overall we've seen credit costs being in a stable range. In terms of net profit, the growth has been at a 25% CAGR, which is a very strong bottom line with good operational leverage is what we've seen. In terms of the quarter-on-quarter basis, net interest income, we've seen an uptick of 9%, and YOY basis we've seen an uptick of 25%. This means that there's steady loan expansion happening, plus there is stable margins as well. In terms of operating profits, up 4% QOQ basis and up 27% YOY basis. This basically means that operating leverage is kicking in. Slight moderation has happened in QOQ, but we'll try to understand as to why that's happened. Credit costs overall have gone down on QOQ basis, but are up year-on-year basis. That means there is net improvement overall, and net profit has seen a growth of around 11% QOQ basis, and YOY basis seen a growth of around 27%. So strong earnings momentum has sustained. So overall, if you take a look at the income statement, it's certainly a thumbs up considering the way things are moving. The next one is balance sheet. Let's take a look at the metrics here. The AUM 3-year CAGR has seen a growth of 21%. Overall, strong and consistent expansion has been happening when it comes to this particular counter disbursements. If you take a look at that number, the 3-year CAGR has been 17%. Growth is steady, slightly lower than AUM, but still a steady one. For borrowings, total funds, the CAGR, overall in the past 3 years has been around 16%. Funding growth overall is healthy and slightly, more conservative as compared to AUM. But AUM being more than disbursements growth, loan book is growing faster than the fresh loans, and overall indicating lower prepayments as well. And overall, this is how typically it is in a housing finance company as well. In terms of AUM growing faster than borrowings, I think that suggests that there is improving capital efficiency and the disbursement is also slightly lagging, and that means that there is slight moderation in terms of new demand. That is something that we'll ask the management as well in terms of how demand is looking like in terms of where disbursements are standing. So that's with regards to, of course, the two metrics that we talked about. But the next one that we're going to talk about is operational metrics as to how yields, ROAs, etc. are looking like. Now, yields, if we take a look at the past couple of quarters, the yields have slightly declined. This suggests that there might be slight or mild pricing pressure. Shift to maybe safer or lower yields is what the management is probably aiming at. We'll ask the management as to why that has happened. In terms of ROA, there is a very strong profitability, for a company like Aadhaar Housing. It's gone from 4.3 to 4.8 just in the past 2 odd quarters. So a very strong profitability when it comes to the ROA. In terms of cost of borrowing, it's gone from 7.9 to 7.7, which has come down. So that is also on a positive side. And spreads are also overall stable. Around 5.8% is what we've seen as compared to where they were at 5.9% in Q2. But overall cost to income, this is a very interesting one, because if you take a look at how the cost to income has come down in the past couple of years, 38% in FY23 to a 36% in FY26 we have seen. Most certainly a positive one. This indicates that there is improving in efficiency and operating leverage is kicking in when it comes to the cost to income ratio. So overall, in terms of where operational metrics go, it's certainly a very good set of numbers that we are seeing. Now let's take a look at the asset quality as well. In terms of the GNPA to AUM as a percentage, there has not been much movement here. Overall, the asset quality is largely controlled, is what we've seen. FY23 it stood at around 1.16, which is come down slightly to around 1.08 in FY26. For the NNPA, let's try to pull that chart up to AUM, because that is an interesting one. Here also, overall, there is adequate provisioning. Slight uptick is what we've seen in FY26. But overall, this is also not very concerning when it comes to, there is no structural concern when it comes to this metrics as well. So this is with regards to where asset quality goes. Now, in terms of the next metric that we're going to talk about is shareholding. Let's take a look at how the shareholding pattern of this company looks like. Everybody knows that this is a Blackstone-backed company. In terms of where the shareholding goes, when it got listed, the promoters were holding around 76%, which has come down to around 65%. So slight selling has been there, but still a very well-held company. But we'll try to quiz the management around understanding around this backing of Blackstone, how long, long-term view with that stands. FIs have slightly increased their stake in the past 2 years since the listing, from a 4% to around 6%. DIs have also slightly increased the stake from an 8% to 8.5% to around 9.15%, and the public shareholding has gone up from around 11% to almost 20%. So it's a well-held company fairly, and there's strong promoter backing as well. Now let's take a look at street cred as well. Now, in the past 1 year, we've seen, of course, markets consolidating, markets being under pressure as well. 1 month has been very good for the counter. It's given a return of around 12% considered to where the markets have been in the past 1 month. 3 months also, it's been in the positive, given around 8% return. But in a year, it's just up around 9.5%. So just taking a conservative approach here, we've given it a thumbs down, considering that the way it has been growing, the stock has not been that rewarding. But in terms of where valuations go, Aadhaar Housing 1 year forward price to book as per Bloomberg stands at around 2.48 times. That compared to Aptus value stands around 2.2 times, and that as compared to PNB Housing stands at around 1.3 odd times. But what analysts are suggesting is that the way Aadhaar Housing has been growing, the way the loan book is, the way the AUM growth has been like, the slightly higher valuation as compared to both of its peers is justified. And that is why we've taken a neutral approach here, though valuation is slightly higher as compared to peers. But the way it has been growing, this kind of valuation is justified, and that's why we've given it a neutral rating. In terms of, just before I go on to guidance, street coverage, 16 out of 7 analysts have given buy rating on this one. And if I'm not wrong, overall, the expectations as per Bloomberg as to upside return potential for the next year for this counter is around 22%. Moving on to the guidance part, as to what is the guidance that the management has given when it comes to FY27. What they've said is that AUM growth is going to be at 20%. I'm sure that this is a conservative one. We'll try to quiz the management on this one as well, because 3-year CAGR for AUM growth has been 21%, more than what they've guided for. PAT growth as well at 20%, so very constructive when it comes to the PAT growth as well. Disbursement growth is going to be around 17 to 18%. So that's the overall guidance that the management has given for Aadhaar Housing Finance. So that's everything, all the 8 metrics that we talked about Aadhaar Housing Finance. Now let's take a look at the rating as well. Income statement, most certainly a thumbs up. Everything looks very positive. Balance sheet also, very strong balance sheet, but just taking a conservative approach here and giving it a neutral rating. Operational metrics, most certainly a thumbs up with yields, ROA, everything improving. Asset quality, we've given a slightly neutral rating to this one, considering that it's not moved much in the past couple of years. Shareholding, we've given it a neutral rating just to just from the approach of trying to quiz the management with regards to how Blackstone is looking at this holding from a long-term perspective. Street cred is a thumbs down because in the last 1 year it's not a very attractive return as compared to the way the company has grown. Valuations again is a neutral rating here because slightly expensive to its peers, but at the same time it's justified, like I said, because of the way the company has been growing very well. Lastly, FY27 guidance, most certainly a thumbs up, considering that they've given 20% growth guidance in AUM as well as 20% growth guidance in PAT. So the final rating for Aadhaar Housing comes out to be 5 out of 8, which is a very good rating. We are joined by Rishi Anand, who is the Managing Director and CEO of Aadhaar Housing Finance, joining us. Rishi, thank you so much, first of all, for taking out the time. My first question to you is, with regards to the guidance that you've given, AUM growth at 20%, PAT growth at 20%, 3-year CAGR, if you look at your AUM growth, it's been more than that 20% mark, right? Just want to understand that this guidance is given on taking a conservative approach. Do you think you can do better than that 20% in terms of where FY27 goes?
Great. Very good morning, Mahima. A tricky question to start with. Yes, we have given a clear guidance of 20% growth on AUM, 20% growth on PAT, keep the GNPA below 1.1. These are pure guidance numbers. And, end of the day, we always give range bound. So when I said 20%, I always meant 20 to 22%, both in terms of profits as well as on AUM. And on best effort basis, why not? Our CAG, and you're right, our CAGR has been 21%, and on effort basis it should be above 20% as we go ahead.
Okay. The other aspect, Rishi, is with regards to how AUM has been compounding faster than your disbursements, right? Just want to get a sense. This is on account of lower prepayments is what we're seeing. What are the trends looking like when it comes to repayments? And going forward in FY27, what are you expecting?
Yes, you've picked up the right point. It is on account of lower prepayments and foreclosures. If I look at the foreclosures that was in FY23, it was in the range bound of 18-19%. Now we're talking about 17%. So lower the prepayments, higher the AUM growth will be. But from a disbursement, purely from an incremental disbursement perspective, anywhere between 18 to 20% is what we are looking at, which will compound or throw a AUM growth of about 21 to 22%.
Got it. Correct me if I'm wrong here, Rishi. You have given a target of around 50,000 crores of AUM in the next 3 years. Help us understand as to what are going to be the key drivers going forward. Is it going to be geographic expansion, ticket size increase? I mean, how are you just trying to look at that growth coming in?
So, Mahima, it is going to be, and you're right on the 50,000 crore number. Even if I talk about a 20% AUM growth for the next 3 years, that's the simple maths that we reach about 50,000 crores. There are going to be multiple things that are going to fuel this 50,000 crores, right? From, yes, expansion, keep adding 30 to 40 branches year on year. We are today 626 branches, 22 states, 550 districts being covered. Keep adding 30 more branches in tier 2 and below, which is our emerging concept. That fuels it. Second is, more importantly, you'll have to look at what is happening on the demand side. All the state governments, the central government, the PMAY scheme, the BLC scheme, the affordable housing projects. There is too much happening right now as we speak in the EWS-LIG segment. That's what we cater to. To top it up, I think it is, and we've invested a lot in the last 2 years on technology, on implementing, on getting the right AI inputs into our processes. So all that is going to fuel our efficiencies and better productivities. I would say a combination of all three is going to fuel this 50,000 crores.
Understood. With regards to your yields, slightly they're trending lower, and this I understand this on account of PLR cuts as well as the the mix in terms of changes in the mix. Just want to understand as to how confident are you going forward with regards to your spreads? Will they be maintained at that 5.8% mark?
So what we have maintained, Mahima, always is that we will always be a company upward of 5.5. Today we are trending at about 5.8. We, in the short term, I don't see any reason why this 5.8 should not be maintained. And you're right, 15 bips cut we did in February, that has impacted, and that's been across the book. So that has given a little impact. But a 5.8 is completely sustainable in the short to medium term. 70-30 breakup of home loan to non-home loan is what we're going to be maintaining. We are going to be increasing 1% self-employed. Today, self-employed is about 45% on my book. We are going to be increasing that by a percentage each year. That is by design. And that's going to help us balance out the spreads that we maintain.
In terms of ROA, it's trading at around 4.8%, which is one of the best in class. Just want to get a sense as to how sustainable is this ratio? Because I want to understand as to how much of this is structural and cyclical.
So 4.8, the number that you've been quoting is for the quarter. But if I look at the financial year complete, it is 4.3. And even on a 4.3, we happen to be one of the best in the peer group in the industry that is being delivered. And I don't see any reason why a company which has reached a 4.3, there should be any reasons why it should be dropping further. So we are very confident of maintaining the ROAs that have been delivered.
Cost to income has been improving steadily. If we take a look at how the comparison has been from FY23 to FY26, I want to understand as to how much of an operating leverage is still left, considering that there is going to be branch expansions going forward. How are you looking at that trend?
So our vision has been very clear, Mahima, that 40 to 50 bips year-on-year basis, we should look at reducing the cost to income purely by building in efficiencies. We speak about branch network, but the kind of branches we open are low OPEX branches, the low CAPEX and OPEX branches, which does not impact, and they typically break even in about 9 months. So that does not impact the cost to income at the percentages we talk about, and clearly indicating 40 to 50 bips reduction in the cost to income as we go ahead. And you're right, if I remember right, in the last 3 years, we would have dropped our cost to income by about 300 bips.
Okay, got it. Your gross NPA and net NPA, largely have been stable, and that's not a concern as well for a company like you. But I wanted to understand that credit costs have seen some volatility. So going forward, how are you looking at that trend?
No, we've been very clear on credit, the credit cost, asset quality. You indicated GNPA and NPA. There are no issues at all. We guided the market for a 1.1%. We've closed at about 1.08% GNPA, so well within range bound. Credit cost, we've always maintained that we will be a company not beyond 25 bips of credit cost, and we would. There is a lot of confidence around maintaining that level.
Understood. Rishi, you're one of those companies which is backed by, which has a very strong backing of Blackstone. Although the percentage of holding has come down to around 64%, just want to just want to understand in terms of going forward from a long-term relationship view, how are you viewing that percentage not going down?
So, Mahima, this is a question best asked to Blackstone. Having said that, indicatively, you see, they came in 2019 June, if I'm right, on the month, and the rollover of the fund has just happened in February this year. Rollover obviously brings in a lot of comfort and trust on the management. It brings in a lot of stability across the way the models of private equity model work, and we as management, obviously, from a Blackstone perspective, there are no indications at all of looking at early exits, etc. So, as I said, this question better be asked to them. But as management, it gives a lot of comfort with a player like a private equity like Blackstone backing us. And yes, you're right. The 75% on the rollover came down to about 65%. 10% moved on to a sovereign fund based out of Abu Dhabi. So, but broadly, the shareholding pattern remains in the comfort zone.
Understood. Given that expectation is that the rate cycle is going to remain stable for at least next 2 to 3 odd quarters, just want to get a sense as to how sensitive in terms of, are you in terms of margins? If if there is surprise on the upside going forward, how are you looking at that metric?
The clear view at Aadhaar is that we have seen the peak, not the peak, the downward trend. From here on, it should be steady state given the disturbances across Middle East. But if you look at the composition of the book, Mahima, we are a 75% floating book on the asset side, and we are a 74% floating book on the liability side. So whatever comes in eventually gets passed on. And this composition of 75% and 75% helps us protect our margins and spreads. So there is no serious reason why my spreads should be under threat. Yeah, there can be always a lag of a quarter here and there, which is operational reasons, but broadly it is protected.
You've highlighted that tier 2, tier 3 markets are still very strong for you, considering, everything that's happening geopolitically with regards to West Asia conflicts. Are you seeing, any pressure in terms of, where demand goes? Because, overall, it is putting pressure in terms of when it comes to the Aam Aadmi money that comes in their hand, and inflation is certainly putting pressure on them. So are you seeing any pressure in the near term because of this aspect?
I think you chose the right word, Mahima, Aam Aadmi. That's what we do. We cater to EWS-LIG. This is the actual Aam Aadmi in the society. Aam Aadmi deals more in essential commodities. He's the guy who is lowest in the state of the society. It does not matter to him what is happening in West Asia, because he's not an NRI, and NRI flows are not coming to him. Having said that, our first line of defense has always been bouncing, etc. So we keep a close tab on what is happening on account of the West Asia issue. Is there going to be an issue around demand? See, my customer is a consumer who is doing a construction of a 2-room in a remote tier 2, tier 3 city. He's buying a small, 10 lakh kind of properties. That's the consumer I'm dealing with. We even post-COVID, we all said that markets are going to go down for the next couple of years, but this segment always prove everybody wrong. So I don't see any reasons why, especially because of the consumer that I cater to, I don't see any disturbances in that trend. Plus, to top it up with the government initiatives of PMAY, it is helping us a lot on the ground.
Rishi, thank you so much for taking out the time and helping us answer all those questions that you did so candidly. Thank you so much for that. All right, viewers, so that was, of course, the management of Aadhaar Housing Finance. But with that, we're completely out of time on this edition of Know Your Company. But do stay tuned. More news and updates on the other side.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Namaskar, Kolkata. NDTV Profit team is here in Kolkata, where the action is there, and it seems like there's a new sunrise, new dawn in the corporate and the economic sentiment of Bengal. That's what I've been hearing. But we'll get you all the action in NDTV Profit, be it corporates, traders, and even the startups. What's the story next for Bengal?
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth.
Presented by Canara Bank. Together we can.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. If you look at 2026 as a whole, then it's not been a very good year for the equity markets. And that's for obvious reasons this time around. You've had a geopolitical crisis that has had a bearing on Indian equity markets, and you saw a rough period in the month of March. But the month of April, if you stuck it out and if you continued to invest and possibly even bought the dip in March, you would have seen a very sharp up move in the month of April. The question I'm asking today is which schemes managed to catch most of that up move or potentially even beat the market during that time period, and whether these schemes fit into your portfolio and whether or not you should allocate from this point on to certain styles of investing. For example, value or growth or momentum even. What should you align your strategy to? I'm joined today by Santosh Joseph, who's the founder of Germinate Investor Services. Santosh, thanks so much for taking the time, and pleasure speaking with you as always. Let's talk about the context first, right? Because April has been an incredible month for the market as a whole. The question is, have funds managed to capture that?
Hi, Alex. Good to be here, and definitely better times than in the month of March that we've just seen. We went into the month of March with a lot of expectation after the India-US trade deal was done. But then on the onset of war in the early week of March, we had a really tough month to go by. And April was a completely different story. Now, when you just look at these 2 months, you have seen that the markets have behaved diametrically opposite to each other just for those 2 months, March and April. And anybody, and that was the question that you asked, if went out, took the courage to buy that extreme volatility and that corrective phase in March, has been very handsomely rewarded in the month of April, because the index itself bounced back some 8-9%, mid cap was up some 12-13%, and the small cap, the most beaten down, was up 17% just in the month of April. Now, this also led to many funds, catching up on performances, and especially for the person who really went out and bought the small cap in the toughest phase, it's been a very rewarding experience.
Let's talk about individual counters though. And the question is how many, if you've done that research, Santosh, how many small cap funds managed to keep pace with the benchmark or even better the benchmark? So let's start there first. In that list of small caps, and there are quite a few of them, what are the top performers and what worked for them?
As usual, Alex, not all of them were able to capture it. There were a couple of reasons. The first reason is that even during this correction, there are some small caps that maybe raised cash or maybe moved a little bit into large cap or maybe moved into the defensive side. But the guys who stuck to the mandate, now I'm going to give you the names on the screen shortly, but the guys who stuck to the mandate, who did take the beating in the month of March, were the ones that actually bounced back really sharply. One of the most obvious names that did well was Bank of India small cap, the JM small cap, Sundaram small cap, Motilal Franklin. Now, what this tells you is that when you look back at these funds and wonder how they were able to capture that, is because they stuck to the mandate of being in the same segment, being fully invested, and letting the scheme investment objective play out fully for the benefit of investors. Now, in the whole list of the small cap universe, there are only some 8 or 9 that have been able to beat the benchmark. And within that 8 or 9, I have listed some 5 or 6 funds that have not only beaten the benchmark, but have actually generated a very decent alpha. Mind you, this is just a short time frame, 30 days in the month of April, but still, it's a proof of how the mandate followed strictly, and maintaining the position that you believe the small cap should hold has been the most rewarding factor.
Yeah, indeed. You have Bank of India small cap, for example, that has gained 20.5% in that month itself. And so therefore recovering quite a bit of ground. Incidentally, this makes a one-year return look much better than it would have at the end of March. But let's talk about the mid-cap index as well. And we'll talk about mid-cap, flexi-cap as well as multi-cap. But first, mid-cap. Is a similar situation panning out here?
Similar situation. There are about 8 or 9 funds that have been comfortably able to beat the benchmark and generate a 20-25% alpha. You have HSBC mid-cap, you got Helios, you got ICICI Prudential, Invesco, beating the mid-cap index. And I think I'd like to add to what you just said. Some of them, just in the month of April alone, have been able to autocorrect the one-year performances. Now, in the whole universe, there's about more than 50% that have been not able to beat the benchmark. There are some 8-9 funds that have been able to beat the benchmark. The top 4-5 funds have not only beaten the benchmark, but have generated a good 10-20% alpha just in that space.
Got it. Okay, so, and we'll delve a little deeper into some of these names, but I want to talk about the flexi cap category because this is the most widely owned category. And you have at the top of the list from the data that you've shared with me, Quant Flexi Cap Fund, which hasn't really made it to the top tier in quite a while. But let's talk about that as well as the other players.
So I think for our context here, FlexiCap is something that we should really look at more seriously, because not everybody will have the courage to go out in a month like March to go and buy the mid cap and small cap. But if anybody were interested in equities, and this would, in my opinion, be the first port of call to enter into a FlexiCap fund, which has got a good mix of large cap, mid cap and small cap. Now within this, why Quant stands out is interesting to note that they've stuck to the mandate, and they did take a significant beating through the past 12-18 months. And to see the kind of bounce back they've had in the month of April, for many of the investors who did not panic, who kept to the mandate of staying invested when the scheme is maintaining the scheme objective, they've been rewarded. Now, I know many 6 months ago, 9 months ago, who did not want to touch Quant FlexiCap because they were under pressure for performance. Likewise, when you look at HSBC, Bank of India, Helios FlexiCap, all of them have proved that if you're staying invested, you will be rewarded in the right strategy, in the right scheme of things if you stay put.
You know, the one that does not make it to the list is actually telling, right? Because the largest FlexiCap fund is known for its outperformance over long periods of time, but it's not necessarily known, Santosh, for catching that uptrend, right? It's usually known for protecting your downside. And I'm talking about Parag Parikh Flexi Cap Fund, right? Practically everybody is holding this scheme. The point is that they've continued to have that cash position, so obviously they wouldn't get that uptrend, right?
So two things. I think you nailed it. A cash position and the positioning of the fund manager in how he was expecting the month of April would have been a significant factor into any flexi cap fund being, able to capture this. The second part that we have to also mindfully watch is after what happened in the month of March. You will notice that many portfolio managers moved, especially in the flexi cap fund, where their mandate allowed them to be flexi cap in the market capitalization. There was a movement towards large cap and cash.
Whether a large number of schemes as a result of that have managed to more or less keep pace with the benchmark, or is it a similar situation that you saw in the previous categories where there are a few outperformers?
So one, in the multi-cap category, the number of outperformers are actually lesser than small cap, mid cap, and even flexi cap. Now, that's also because, these have a minimum requirement in mid and small cap and large cap. And within that, they can have a little bit of cash allocation. Though, because of being in mid and small cap, there is definitely an outperformance. But when you actually compare it to the comparable universe of the index, which is how much you broke the whole category down to 50% being large cap, 20% being mid cap, and 25% mid cap, and 25% small cap, the number of winners there are actually limited. And also, the ability to beat the 1 year return has been slightly lesser in the multi-cap, because just before the month of April, the correction in mid-cap and small-cap is the most severe, because large caps are the ones that kind of protected and gave you a defensive outlook. Therefore, if an investor does not want to cherry pick these mid-cap and small-cap opportunities, your port of call, like I mentioned earlier, will be between flexi cap and multi cap, because here you're not worried about whether should I enter mid cap or exit mid cap or enter small cap, large cap. All those things are, the biases are removed out, and therefore this will take slightly longer time to turn around.
The fact that the quant flexi cap fund is once again ranking at the top of both flexi cap and multi cap, though, what does that tell you?
It tells you clearly that sometimes when you get beaten hard, you also have the ability to bounce back hard because you stuck to your conviction and maybe the investment mandate. It here clearly also mentions that what the positioning of the fund manager and his belief has been. Now, let me also play the different advocate here, that if April did not turn out to be the way it was, where small and mid cap gave you this blockbuster return, then we would not be looking at both the quant flexi cap and multi cap maybe being on the top of the game or capturing the highest alpha in that short period of time. So in the given period of time for our study for the month of April, where we understanding how funds perform in a surprisingly positive month, the verdict is clear that the guys who stuck to the mandate, the guys who believed that irrespective of taking beating when the fund was underperforming, I will one day get paid off.
You can say devil's advocate. It's fine. It's not a bad thing, Santosh. You can say different advocate, but you can also say devil's advocate. But having said that, let me ask you about what the strategy should be going forward, which is that incremental allocation. For those that have held true and done their SIPs, that's fine. But these are markets which present you with an opportunity to do a tactical allocation selectively as well. And this can prove very beneficial if you look down 1 year or 2 years or 3 years down the line, the longer you look. So what is the advice that you're dispensing right now?
See, not always we get these kind of opportunities, and when you do get them, you have a chance to go back and rework your portfolio in months like March and April. Now, let's just go back to talk about the small cap case. You had, we discussed this previously too, when exactly a year or 14 months ago, when we spoke about the bubble in the small cap and we closed the fund. And earlier in the month of February, March, we had ICICI Prudential come and speak about reopening the small cap fund. Now, what it allows you is that if you're overweight or underweight, these are the kind of opportunities that help you reallocate and get very strategic about where your positioning of the portfolio should be. The second thing is, and I must make a mention of this, many people now have started beginning to doubt whether my SIP for the last 1 year or 2 years is even worth it. Should I change the fund? My take on this is that the SIPs will work best in these kind of volatile times. You have to wait to ride out this volatility completely. We're still not out of the woods yet. Traditionally, when a 2-year or a 3-year SIP looks volatile, that's the time you dig in more, continue to be consistent with your SIP and let it continue. For the investors who are new and have the luxury to make those changes, this is the opportunity to course correct either underweight or overweight position.
The concept of dry powder has been discussed quite a bit for obvious reasons, right? Especially when you talk about March. The tendency is to deploy quite a bit of it and then see the market fall by a further 10-15%. So therefore, with this up move that you've seen and the return to at least the near-term mean, would you say that it's still beneficial to hold dry powder, and how do you do it?
Alex, I for one personally think that we should have right now dry powder. March was a great month to deploy dry powder. I think it's both strategic and tactical right now to have powder dry because we're not out of any woods yet. In fact, we all thought war will get over in 1 week or 2 week or 3 week, and therefore many people thought that maybe just in the month of April we had many and multiple ceasefire announcements, and the people who bought in March have been rewarded in the month of April. But we all know the ground realities. We're nowhere close to a solution yet. One of the key indicators to watch this for is the oil prices, and oil prices definitely have an inverse relation on equities and markets in general, inflation and the consequences thereof. So having powder dry right now is vital because only then you'll be able to participate in a month like March to be able to capture the oversold conditions and to be...
How much, Santosh?
So you will not be able to always deploy at the most opportune moment. I think there's this beautiful quote that's saying that more money is lost in anticipation of corrections than corrections themselves. March and April taught us that lesson. If the guys did not deploy at least 50% of the dry powder they had in the month of March, you would have not captured the upside. So what I'm saying is at least have 20 to 30% dry powder even today. And whenever you get an opportunity of a 5 to 10% correction, you at least park 50% of that money. So for example, if I'm holding 30% dry powder today, and let's say the month of May, I didn't get...
Sorry, Santosh, just to cut in here, but isn't 20 to 30%, you're talking about the portfolio level, 22, or are you saying if you have an equity portfolio that is currently what, 65-70% of your portfolio, 20% of that, are you saying at the portfolio level?
I'm referring at the portfolio level.
But isn't that too much?
It is, because see, I'll tell you what, right now it's not the time to be aggressive unless we have confirmed news that things have settled down fully. Because just about 2 weeks ago, when oil was at $90-95 a barrel, we thought we were coming to an end. At $100, we're coming to a barrel. And just recently, we touched almost $120 a barrel. I feel that we should not be too excited already, and we should be a little cautious. These are times not to be adventurous, but to play the game carefully. So having 20-30% cash in the portfolio is no harm, because the balance 65-75% that invested is good enough for you to capture the upside.
Fair point. All right. Quick last word. Very quick, 10 seconds. If there is one strategy in terms of an orientation, value, growth, etc., that you would be preferential to right now, what would it be?
Number one, please now do not take your opinion or get stuck on strategies, because it's a difficult market to call. Better to be as diversified and broad-based as possible. Bottom line for me, I think a multi-asset offers great value right now, especially the ones that have got multiple things thrown in, which is commodities, international, domestic equities and domestic fixed income, should be better positioned, because that is the one that allows the investors to stay put through volatile times and stay longer, which is where you'll get rewarded.
Okay, excellent answer. All right, Santosh, thanks so much for taking the time. Pleasure speaking with you.
Thanks, Alex. Catch you.
All right, on that note, let's turn to another conversation. And this is what we normally do on this program. We get you two different concepts on an ongoing basis. And I'd like to talk about a very important aspect today, which is health insurance, but from the perspective of a newborn child. What is currently available in the market for a potential mother, potential parent to buy that will give them that cover? Most health insurance policies only cover a child after the first 90 odd days. To talk about what the options are, I'm joined today by Mayank Gosar, who is the Chief Executive Officer of Softcon Capital. Mayank, thanks so much for taking the time.
Hello. Hi.
So let me start with this, right? Explain the landscape to us. What are the health insurance policies that are currently available that offer, or actually before we get to that, what is the rule that health insurance policies normally have with regard to covering of child?
So Alex, one important problem which we are facing right now is that generally in standard policies, a newborn baby will be added in the policy after 90 days. Okay, so there is a big risk for the first day 1 to day 90. So that generally no policies give you coverage for first 90 days.
Okay, so and this is important obviously because there are situations now where there could be a premature delivery or there could be congenital situations that can occur that would require extended hospitalization, possibly even in the neonatal ICU, and that is costly, isn't it?
Yeah. So if a premature baby has born and say she is kept in the hospital for 1 to 2 months also, the cost can be somewhere about 25 to 50 lakhs.
Okay.
In a city like Bombay.
In a city like Mumbai. Okay. So there's a clear requirement to have cover. Why is it that insurance companies have this 90-day waiting period? What is the rationale?
So the logic behind that is generally whenever we take an insurance policy, the underwriting will happen as to what is your medical history, are you good health and all that. But when it comes to a baby, the insurance company does not know whether there are any complications and all. So if the insurance company is giving a blanket cover from day one, then insurance company is also at risk because complications, the cost can be ever rising.
Yeah, and it's a very important point that you're making, Mayank, because for an insurance company, it's called an actuarial science for a reason.
Correct.
They weigh the risk and then they price it. It's essentially a transfer of the risk from the buyer of the policy to the insurance company. And it says that based on the risk, if the risk is higher, you need to pay me more money.
Additional premium.
Right? So let's talk about which companies currently offer policies for a child on day one.
So in the market, there are companies like Niva Bupa, Star Health, HDFC, Tata are generally offering after 90 days. But there are companies like Niva Bupa and Star. But many of those products have some or the other limitations.
What are they?
So in Niva Bupa, there is a product Aspire plan. In that they are offering coverage from day one up to the entire sum insured of the policy. So there is no condition.
So there is no rider for this?
Yeah, there is no rider to it. In Star Health, there is one plan wherein the coverage is up to 25% of the original sum insured.
Okay.
And in some other plans, there are coverages available, but there are cappings to it. Like a newborn baby's cover will be capped to the maternity cover itself. That is your 1 or 2 lakhs. Or there are conditions attached like the newborn baby will be covered from day one, but it will be subject to underwriting.
And what does that mean?
So if a baby has any complications, there is a very high possibility that the underwriter will avoid covering the baby because from day one she has complications.
Okay. And for this Niva Bupa policy, why is it that they're offering? Can you give me an example of how this would work? Give me a cover.
Yeah.
There is maternity benefit as well.
Yes.
And what is the potential cover for the child?
So what happens is in one of the cases, the coverage was for 50 lakhs.
Okay.
Okay. And the premium they had paid somewhere around 25 to 30,000 for 1 year. They had paid for 3 years, so it was somewhere around 75,000 which they had paid. Now against that 75,000 in the maternity event, the mother got somewhere around 60 to 70,000 against that. And the added benefit was that the baby was covered from day one. And there was no limit for there was no sub limit into that. So the baby was covered up to the 50 lakhs.
But this sounds almost too good to be true, Mayank, if you think about it, right? Because they're saying your per year cover is what, 30,000 rupees. And this offers you, your premium. This offers you maternity benefit. So you have to do this 9 months before you get
so there is a waiting period of 9 months.
But assume that you've gotten this in January of 2024.
Right.
And in January of 2025, you have that pregnancy.
Correct.
You're getting that 25,000 maternity benefit.
Back. Yes.
So what is in it for the, and on top of that, you're also giving a 50 lakh cover for the child.
Yes.
How does that work?
So maybe at the insurance company level, it will be like when they're underwriting, they would be underwriting for a lot of policies. So premature baby cases would be less, and the probability is much higher that it will be normal delivery.
Okay.
But in some cases, it can be a big relief to the parents who have, if they have planned 12 to 24 months in advance, it will be a big relief for them. But at the insurance company level, they will have to review how it is progressing, because it's the Niva Bhupa plan is also a new plan.
Okay.
It is not very
so
old.
It might be introductory pricing and all of that. So just a clarification, this 50 lakh cover is a blanket health insurance cover, right? It's not gotten just for the maternity benefit.
Correct. It's a normal health insurance plan with a maternity cover, and the best part is that baby is added from day one.
Okay. So it's important to consider. Thanks so much for taking the time and for spelling this out, because it's an important consideration that potential parents need to make. Thanks so much for joining me today. All right. So bear in mind, we talked about one product, but it's important for you to go out and do your own research. The use case is clearly there. So therefore, bear that in mind if you are planning. You have a point to make?
Just one more point. Whenever the parents are taking the insurance policy, just ensure that the entire medical history is completely disclosed. There should not be any non-disclosure at the end of